Good morning, everybody. Welcome back to another episode of The Market Open. We are officially live. Thank you, everybody, for being here. We're back. We're back. As you can tell in my voice, I have a lot more energy. And I'm excited to be back. Yesterday, woke up and there was no way in hell that I was going to be able to sit and analyze the events of the market. And that is because your boy got COVID. Officially, your boy got COVID. That is why I've been feeling so bad for the past 4 days. Honestly, I'm just happy that I know the reason now. Because I didn't go to the doctors for the past couple days because I was like, it'll go away. Like, it's nothing that serious. And it still is nothing that serious. I mean, with COVID, you can't really do anything. But I'm happy I at least have a reason for why I've been feeling this way. And so, yeah, it's COVID. You can't really do anything. Drink a lot of water, drink a lot of fluids, get some rest. Yesterday, like, genuinely, I woke up and I was like, there's no way I can talk. I don't have it in me to actually get up and talk. Today, I woke up and I felt a lot better. I think I got some really good sleep last night. The worst part about COVID is you randomly feel hot, you randomly feel cold. And so you're constantly like shivering and different. You're either sweating a lot or you're shivering. And today I woke up and I didn't feel any of that. Whereas the past 4 days I woke up and I was either shivering or sweating. So today I woke up in kind of like a normal body temperature state. So naturally I felt better. And so I think that's why it's going to be easier to get through the day. So we're here. Thank you, everybody, for being here. Today's an important day. The reason we're live early is because in the next 5 minutes, we're going to get CPI. I know I was gone yesterday, and I know the market went down. It is kind of weird. Like, the fact that it's happened 2 times, that I missed 2 of the biggest days of 2026 when it comes to the downside momentum, it is a little weird. It sounds like I'm running away from the camera every time we go red. It's like I just happen to not show up when we go super red. But it's really just coincidental that ends up happening. S&P 500 right there. It did recover a lot of what it lost yesterday. Yesterday, we were down 2%. We ended the day down 0.29%. We are back down another 1% in the pre-market. So it is not at the absolute lows of yesterday, 728, but it's close, 730.6. And as a result, you're seeing everything else go red. Palo Alto's red, Duolingo's red, ServiceNow, NVIDIA, they almost took her below 200 yesterday, recovered to 208, now it's at 203. Marvell, 330 to 255. It hit 244 at one point yesterday. Micron down 4%, CoreWeave down 3%. I mean, everything is red. And before we get into CPI, which is going to be kind of the defining reason, I think, for how the markets will play out today, markets are expecting 4% flat in the month of May and 0.4% month over month. Year over year, they're expecting 4%. It looks like consensus is going to be above 4%, which should be priced in. And maybe that's kind of why we fell yesterday. But if it's much worse, this will be our second month of bad PPI. The only reason you ignore CPI and PPI is because you assume the war in Iran is going to be over because the energy crisis has been leading to this type of inflation headwind. And then, unfortunately, you get a Trump tweet from this morning, which I think is part of the reason why the markets, once again, are not ignoring the war in Iran, which would allow them to move past inflation. Trump. Iran's military is a complete and total mess. Much of it, like their Navy and Air Force, doesn't even exist anymore. They have been completely defeated. Iran is all talk and no action. The bully of the Middle East is dead. They've taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price. The idea that they will have to pay the price does not sound like we are... literally 2 days ago, Trump said, I think we'll get a deal in a week. And now he's talking about paying the price. Either he's being hyperbolic here and you guys are right. 4.2% is the consensus. Yeah, 4.2. It says 4.0% is the forecast. 4.2 is consensus. Okay, so consensus is usually what the street looks at. So consensus 4.2, that's what we have to hopefully come below in for inflation. But, either he's being hyperbolic and trying to, once again, negotiate by being aggressive, or he's seriously going to attack them. And I mean, we're going to find out soon enough kind of what ends up happening. This is what he told Fox News this morning.
Now, interestingly, President Trump told me that he is getting close to ordering new strikes against Iranian power plants and bridges because he says the Iranians are tapping the United States along when it comes to the negotiating process. He says the bully of the Middle East is dead. And he told me I may keep going when I asked him about a possible response to the Iranian missile fire that targeted U.S. forces in Kuwait, Bahrain, and Jordan overnight. The president said they had a chance to sign a deal and survive, indicating again that he may order new strikes against the Iranian regime in response to their dragging their feet at the negotiating table. Now
again, Iran did attack some allies yesterday in Bahrain, Kuwait, Iraq, etc. So there was the helicopter incident from yesterday, which I don't think was the reason for the red yesterday. The red started happening well before the helicopter incident, where a U.S. helicopter got shot down. The pilots were able to survive, but the U.S. responded last night and struck Iran based on those attacks. Iran then struck some of our Middle Eastern allies. So obviously escalation has built up, and maybe Trump is saying this to finally get them to capitulate at the negotiating table, or maybe Trump's like, you know what, screw it. We tried negotiating, we tried diplomacy, it's not working. We're going back to fighting. The problem is if we go back to fighting, and I'm actually surprised at the resilience of oil. Guys, oil is still below 90. Like, I am very surprised that markets aren't giving it a higher likelihood of getting back to 100. And I think part of the reason for that is because there's this belief collectively that this war will be over. Once again, Trump is just spewing rhetoric, and eventually we will be able to move on. But like that, for how long is the market going to be able to be like, yeah, it'll be okay? Because every update we see is like, well, it's not okay, or unless we're just overthinking it and Trump is just saying it to say it, and eventually there'll be a deal. But I think that's also part of the reason stocks have not completely collapsed. I mean, look, it's ugly. We've had from the high? We were at 750 on the high. We're about to get CPI in about 20 seconds. No, 760. So we're at 737. So we are down 3% from the highs. Now we went up pretty aggressively as well, right? So 3% from the highs is not that crazy, but it's not a full-on collapse. And I wonder if that happens, or if the earnings story is just too good to make that happen. And we'll talk about kind of the bull and the bear case. There's a lot of different macro stuff we have to look at, but overall, it is an ugly waterfall down, but it also was a quick parabolic move up. So I think that's kind of to be expected. And hopefully the CPI is not as aggressive so that we don't have to see more to the downside. All right, CPI in 30 seconds, less than 30 seconds. Again, Street wants 4.2. Let's see what we get. Let's see. Hopefully it's around 4.2 or 4.2 exactly. 4.2 exactly. We did beat on the month over month, 0.5 versus, well, no, actually consensus was 0.5. So that came in exactly the same. We actually were lower on core inflation, 0.2 versus 0.3. And then year-over-year core inflation, 2.9 versus 2.9. Okay, so they came in exactly as expected. S&P has a green candle right there. Perception is reality. And if perception was worse, then the reality would be worse. But it's not as bad as was expected. There's your green candle. Let's see if SPY can get back above 735. 737 is where we closed yesterday. Is that going to be enough to hold it? Or is that going worse? That wasn't as bad as I think some people expected. It was definitely not the best, but if 4.2 is what we expected, then literally it was not as bad as people expected. CPI right here. Let's get some more data. Index for energy rose 3.9% after rising 3.8% in April. The energy index accounted for over 60% of the monthly all items increase. Once again, it was oil. The index for shelter also increased in May, rising 0.3%. The food index increased 0.2%. Index for all items less food and energy rose 0.2%. Indices that increased over the month include communication, airline fares, that's because of oil, medical care, personal care, and recreation. The indices for motor vehicle insurance, household furnishings, and operations and new vehicles were among the major indices that decreased in May. That's actually not that bad. It really isn't. I mean, 4.2 is not amazing, but it's way better than I think what it could have been, which would have been, a lot worse.
Since 3% in September of last year. Quickly, the index that goes back to 1913 comes in at 335. Why do I mention that? Because it's another new all-time high. After 100 and X years, we are now continually almost on a month-over-month basis moving up on the index. And if you look at the core index, same scenario, except for 336. This started in 57, once again a record, you know what? I think we need to also look at real average hourly earnings. Year over year, they came in minus 0.7. And the reason I'm looking at these, because last month we turned it negative at minus 0.3, first negative number since Feb of 23. Now this number becomes the most negative number also since Feb of 23, because that was minus 1.1. And if we look at year over year weekly average hourly earnings, same scenario. It turned negative last month at minus 0.2, first time since May of 23. Now it's even more negative at minus 0.4, which equals May of 23. To find a more negative number, you're in April of 23. So the inflation, of course, affecting average hourly earnings both on a weekly and hourly basis. We want to make sure that earnings keep up with inflation. We don't necessarily want them to be much faster. We don't necessarily want to embed inflation in the wage component. That certainly doesn't seem to be happening here. Interest rates, they were really bouncing around a bit. 10-year briefly traded down to 4.51. It's back to 4.53, which it was pre-number, and that's up 1 basis point. Back to you.
Great, Rick. Thanks. Steve Leisman joins us now with more. Not a lot of big surprises.
Okay, I mean, worst inflation since 2023. But once again, S&P 500 right there really trying to go for 735. It is just not. Marvell went green. Micron went green. It is not as bad as how the market interpreted it, which is why I guess we're seeing a little bit of kind of reprieve right here. The 10-year up a little bit. Bitcoin up a little bit. It really reminds me of 2023 when, you know, we were just hoping it would land within expectations, even though we all knew like 5%, 6% inflation was horrible. But the fact that it's not, you know, if it was 4.3, 4.4, that tick above expectations is always what kind of pisses off the market. And at least you're not getting that here. SoFi, that's up a little bit. Green candle still down 1%. Nebius took a big beating yesterday. I think it went from like 230 down to 204. Now it's at 219. It was at 208 before the print. So this one's getting a nice little move right there back up to 220. I wonder if this will be respected when the market opens, or if this is just pre-market movement on a better than expected print, or if this is actually be bad. It wasn't really better than expected. It was in line with expectations, but nonetheless, this is not as bad as it could have been. And that is what we got. All right, so that's CPI. Let's get into everything going on in the broader markets. We got a lot to talk about, a lot of macro data to look at, and then we'll see what happens when the market opens, and we'll keep going from there. All right, so first question I want to ask everybody is, how are people feeling from yesterday's red? Because I've had a day to think about it, and I think yesterday's red in conjunction with Friday's red means that there's something potentially deeper going on with the markets, and there's some historical stats to kind of back that up. But I guess let's do this question in the chat. Do you care about 2 of the past red days or not? Yes, it's something to care about. No, bulls keep going. And I think if you say yes, it doesn't mean you're bearish. I don't think you have to be described as a bear just to say like, yeah, this is a little concerning that we've had these 2 really aggressive red days within the NASDAQ in the past 3 trading sessions. But I wonder if the sentiment around it is what it is, bulls are going to keep winning, it doesn't matter, is still there, because I'm starting to see a lot more caution. Obviously, you're seeing that in the price action. And the question is now becoming, where is that caution coming from? Why is that caution coming? And how should we interpret the nature of that caution? So let's get into what happened yesterday from a historical perspective, and then we'll get into a bunch of different charts. Yesterday, the NASDAQ fell 5.3%. The last time that even got close to happening was Friday, when we fell 4.5%. The time before that was April of 2025. Goldman Sachs said yesterday's 5.3% move on the NASDAQ intraday was the largest move we have seen on the NASDAQ in a single day in the last 3 years. I didn't know that. I was quite surprised by that historical stat, meaning yesterday's price action to the downside, even though it did end up recovering and we only lost 1% on the NASDAQ, and today we'll see if that kind of can hold up or if we see more downside. It was the largest in the past 3 years, up or down, that we've experienced. And we've had a lot of volatility over the past 3 years. And so when you look at it from that perspective, you're like, hold on. It was already the largest we experienced on Friday. Then we recovered on Monday. And then it was the largest we experienced on Tuesday. And now, we'll see what happens on Wednesday. But what's going on? Because you're not supposed to have an event that's 6 standard deviations above the norm happen, reverse, and then happen again in less than 72 hours. It's one of those things that's like, okay, like, is the market just messing with us? Are people on so much margin that every little 2% drop means they have to liquidate their entire portfolio? Is this really SpaceX IPO stuff? Which I'm starting to not believe that $80 billion of capital for the SpaceX IPO is the reason we lose $2 trillion in 25 minutes of market capitalization of the equity markets. Like, I get that people are raising money for the SpaceX IPO, but I mean, 80 billion should be a drop in the bucket in the grand scheme of things. Now, if we had Anthropic and OpenAI going public right now as well, I could understand it, but 80 billion is going to get funded. Elon's going to find a way to get the money. It's apparently 4x oversubscribed. So it just makes you wonder, why is it happening? What exactly is happening? And I think there's a lot of theories on it, but one theory that I think is undeniable, if anyone saw the heat map yesterday, is rotation. As you can see right here, all of tech and software pretty much ended up going red, communication, semis, etc. Industrials went up, utilities went up, consumer defensives were up, Coca-Cola, Pepsi, financials finally got a little bit of a move as well. Healthcare is potentially coming back. UNH breaking out to 52-week highs. And so, we've seen this happen many times throughout the year where you have tech sell off and you go back into the value names, but it's happened twice in the past 3 days, and it's happened aggressively in the past 3 days. Now, long term, do I think NVIDIA is going to be a better bet than Verizon? Yeah. But in the short term, I mean, NVIDIA is putting up the best earnings in the history of humanity twice in a row, and they can't catch a bid. And you have Jensen out here pumping every single AI stock to the moon. And, Qualcomm ended up falling 15% yesterday. So it's one of those things where it's like, is the market on its tilts? Is the market feeling jittery? Is the market feeling nervous? Is the market saying, enough is enough? These stocks have gone up 7, 8x over the past year. They can't just keep going up in a straight line, even if the earnings justifies that these stocks should get re-rated. Is it a little bit of, hey, we need to have a breather, as Microsoft once again takes a pretty big breather below 400 again, right here in the pre-market. Yeah, on top of that, AI, I agree with what Chris is saying right here, because, I mean, there was a video of, so Claude Fable came out yesterday. I've not gone through the entire thing, but apparently it's really good, and which is really good for the AI trade because you need the models to get better and better and better. But apparently there's a lady who built a trading bot on top of it, and it's doing like 10,000 trades every week autonomously. And those trades are, easier to kind of generate a profit on because it's just like exposing little gaps in the indices and arbitrages and things of that nature. Now, it's not perfect. It's having some losses as well. But the point is you have all these bots that are trading against each other as well, which could, when you have these rapid moves up or down, could be reflecting in the AI either selling or doing something. Robinhood just put out agentic trading, so I would imagine there's a lot more retail investors using that stuff. So you've got all of that. You've got massive amounts of margin, and you've got people that are levered up. We've talked about those South Korean stories of people giving up their life insurance policies just to be able to invest in SK Hynix, which it's been having a great week based on that NVIDIA partnership. But it also makes you wonder, what the hell's going on? Like, what the hell's actually going on? On top of that, you've got some other macro components here. The Japanese yen just approached its weakest level against the US dollar in 40 years. So you've got concerns about a yen carry trade coming up. The Bank of Japan has basically announced that they're going to be raising their benchmark federal funds rate from 0.75 to 1%. Now, that's not that big of a deal, 1%. I mean, they have a little bit more inflation. They have to raise rates. We kind of know that they were going to do that. But the point is they are raising rates, which is never the best for tech stocks or the yen carry trade because people borrow in yen to be able to buy US stocks. And so you just have all these different corresponding factors there, along with the leverage that are coming together that's making people think, what exactly is going on? This is the leverage that continues to be stuck in the system. As you can see, there's just a lot more people that are trading on the levered ETFs. In fact, SOXS, which is 3X short semis, traded 1.3 billion shares. It is in the top 10 volume sessions for US listed ETFs. That happened on June 5th on Friday. So you had QLD, which traded 6 billion shares November in 2008. You had the SPY, October in 2008. You had TQQQ, October 2011. You had SOXL, April 2025. That was the Tariff Liberation Day stuff. And then you had June 5th, last Friday, SOXX, 1.3 billion shares. We don't have the number from yesterday. But, I mean, the fact that a trading session from Friday made the top 10 largest volume sessions for US listed ETFs. These aren't even levered ETFs. These are just US listed ETFs. SOXS is levered, but it is at the end of the day still an ETF. The fact that Friday was that historic to put a short semis ETF in the top 10 volume sessions for trading in the history of the stock market, it just once again makes you think, what the hell is happening and how aggressive is the margin and the leverage in the system actually becoming? And I don't have an answer for any of these questions. I really thought about it last night. I think, I see a lot of people in the chat also just trying to figure out what, like the pattern day trading rule, like, is that real? Like the fact that people have $25,000 and they can now day trade. I think even if like 1 million people blew up a $25,000 account, I don't think that wrecks the market. And maybe creates some more volatility, but like, is that the reason we lost $2 trillion in market cap for an hour yesterday? Because we have some pattern day trading people that now have access to more capital and don't have to worry about getting margin called simply because they have less than $25,000. I don't know. It's probably something that contributes, but is it the biggest contributor? Not exactly sure. If you just came in, CPI came in expectations, 4.2 versus 4.2. Pretty much most stocks went up as soon as that came out. Now most stocks are taking a little bit of a, well, they're not necessarily seeing red candles, but they're not going up straight to the right as they were as soon as CPI came out. NVIDIA got up to 207. Now it's back to 205. S&P as well got up to about 734. And now we're back down to 733. So the CPI pump helped a bit in terms of it not being horrible, but it's not necessarily taking us fully into the green. We're going to see when the market opens if that ends up playing out. Did you buy SpaceX at 135? I put it in order. I don't know if I'm going to get it. Most likely not going to get it, given apparently it's 4 times oversubscribed. But if it opens at like 180, 190, I'm just not buying it. Like I really thought a lot last night about the valuations. I was looking at the number again as well. The valuation makes no sense, guys. Like, I'm sorry, someone has to say it. I don't want to be gaslighted into trying to justify the valuation. The valuation is stupid. Like, it's just simple. The valuation is stupid. I talked to a lot of people last night as well about the SpaceX IPO. Different perspectives that I value, and you just really go back and forth. You're like, this makes no sense. Why am I paying $2 trillion for this? Like, where's my alpha? You would want SpaceX to at least double, right? Okay, so that's gonna be a $4 trillion company. It is, NVIDIA's barely holding $5 trillion. And if you're not buying SpaceX for a double, I don't know why the hell you're buying SpaceX, right? Unless you just want to be part of the story, which is fine. If you're doing it for fun, you're doing it for fun. But like, it makes no sense. Like, it just absolutely makes no sense. And I think the IPO will go well. I think if we get a broad-based market correction, which I think now a lot of people are wondering, will we actually get that? There's no way in hell that thing's going to be able to hold a $2-3 trillion valuation. It's like, who's going to hold it? Every VC that I know, I have 2 friends who got in around 2017. They told me they are ready to dump their shares the minute they have access to. And Elon has this tiered system where if like the stock goes up 30% or 20%, then a certain amount of VCs get to unlock the shares that they can dump. One of my friends was like, dude, I like, as soon as I have the opportunity, these shares are leaving my hand. I'm not holding this at this valuation. And so when the VCs that believed in Elon the most, when no one did, are just waiting to dump it, that means someone has to be exit liquidity. And yeah, the infinite TAM of SpaceX might end up continuing to justify the value. But the point is, like, when we are getting gaslighted as a collective investor community by the biggest names in the world telling us that this is, the thing that you have to own, it starts to feel a little jittery. And I can understand that people are selling off some of their good stocks to be able to buy SpaceX, and maybe that's creating some of the volatility, but it's also leading to a lot of people wondering, should we be owning anything super high beta in a world in which this company has this much level of attraction to it when the fundamentals are so unbelievably bad? Quality of the company is amazing, but the actual numbers, like, by the way, they didn't have to go public at 2 trillion. They didn't have to go, they could have picked like 1.3, 1.4. This is pure greed. Like, that's all it is. It's investors from the past that want a really big exit. I mean, if it was purely up to Elon, I don't think he would pick a $2 trillion valuation. He would have to incur more dilution if he picks a lower valuation, but he could pick something that's kind of reasonable. The reason they're not is because they've had investors in this for the past 2 decades that want a really big exit, and he promised them a big exit back in 2010. And so they're picking the craziest valuation that they think people will be willing to pay. It's just, it doesn't make any sense. And we know that it doesn't make any sense. The reason is because the float is really small. Well, that's also true. That float is incredibly small. And I think Elon's being very strategic along with Goldman Sachs and JP Morgan that are underwriting this thing to be able to make sure that the float stays small. Very similar to the ARM IPO where SoftBank owned 90% of it. Oh, speaking of SoftBank, by the way, this was incredibly interesting. So let's get into some of the AI headlines. SoftBank is putting up their $60 billion OpenAI stake to get a $6 billion margin loan. And they got rejected from every bank they went to. According to sources, SoftBank is still considering various financing options and may restart negotiations into the future. This comes just weeks after the company lowered its initial $10 billion target by 40%. The primary reason for the stalled loan lies in the fact that OpenAI's valuation lacks a basis convincing enough for banks. If SoftBank cannot put up their OpenAI as collateral, and again, they have a massive stake in the company, $60 billion, to get a $6 billion line of credit. If the banks don't feel comfortable enough giving them $6 billion because of, the idea of the intrinsic value of OpenAI, it makes you start to wonder, why the hell would I be buying the OpenAI IPO? If a bank can't say, oh yeah, OpenAI, growing like crazy, amazing fundamentals, one of the leading top frontier labs on the planet, yeah, we can lend money against it. That thing's not going to go out of business. If they're just like, well, I don't know if it's really worth $852 billion. It makes you wonder, is SpaceX really worth $2 trillion? Is Anthropic really worth $950 billion? None of these companies are profitable. Is Stripe really worth $300 billion? If Stripe goes public in the actual markets today that has to deal with fintech algorithms, I don't know if Stripe gets to hold that type of valuation. The banks know one thing: these businesses burn cash. Well, and that's the biggest thing. I think that's, speaking back to the context of this market sell-off that we've been seeing, I think the market's starting to recognize again, these companies are not as profitable as we think they are. And these companies don't have a path to profitability as easily as we think they do. Now, that doesn't mean Micron has to go back down to 400, 500, because Micron is printing a lot of cash and Micron's PE is severely undervalued, but Micron is also gone up parabolically. So in a market where the reason Micron has this demand is because of the frontier models and all the cash that they're spending on training more models, that's why you have more memory, but the frontier models aren't actually producing a profit. At what point do the picks and shovels plays that are basically going up vertically, not because of the value they provide in AI, but because of like the small components that essentially are commoditized but have massive supply-demand pricing imbalance that they provide for the chips that power the actual value that comes out of the models, even though the models aren't profitable? At what point does the market say, well, if the models aren't really profitable or valuable yet, maybe the picks and shovels plays also shouldn't be as aggressively valued, even though you can argue Micron's not as aggressively valued in the public markets. Now, that's not being bearish on the long-term thesis of AI and what's going to happen as these models continue to get better and as we see more use cases. But in the short term, given how vertical the moves have gone, same thing with the neoclouds. I think the market's thinking about that with Nebius, CoreWeave, et cetera. You're just, I think, starting to get a lot more questions than answers around why this is happening. And I think that's reasonable. I think it's probably healthy. I mean, as much as it sucks that we're down 3% from all-time highs, it also does. If we were at 780 on the S&P right now, I think people would feel a lot more uncomfortable than the fact that we're at 730. Because if we went that vertical, you're just begging for a blow off top. Whereas now we can kind of relax a little bit and maybe consolidate some of these gains and get ready to make the next leg up going into the fall. Maybe it happens in the summer. The summer tends to be a little tough, but I think time will see how bad this ends up playing out. Is Karp going to be on CNBC today? Or are you guys saying Karp is on CNBC? Is he on CNBC today? If he is, and Chad didn't tell me, then we have an issue with Mr. Chad Walquist. If Karp is going to actually be on CNBC today. All right, Karp hasn't been on CNBC in a while. He is. Chad, we're going to have a conversation, buddy. We're going to have a conversation. Chad's going to be like, I didn't even know. Like, I didn't know he was going to be on. All right, so we'll see when Karp gets on. And we'll talk about, and we'll take a look at what he has to say. SMCI, they're diluting by $7 billion. That's why that stock is down 11%. Once again, Google can get away with it. Maybe Meta can get away with it, although the market is not liking what Meta is doing. I don't know if SMCI can get away with it. I mean, they probably can because they have so much demand, but yeah, that stock is down 7% yesterday, down another 11% today. If you're going to dilute by $7 billion, which is basically 25% of the market cap, yeah, I don't think the market is necessarily going to be the happiest about it. So again, everything I'm saying right here is not to build a bear case for AI or build a bear case for the stock market. Because I think the earnings growth, which we're going to see again in Q2, is so fundamental that it's really hard to flip bearish. It's really hard to be like, well, Michael Burry was right. I just personally am not in that camp. And I don't think that camp is actually going to come true in any meaningful way. But the idea that we need another 3-4% down, which would put us back at 7,000. And now I don't think we're going back to 6,300 or 6,000 like Tom Lee's saying, 20% down. But can we go back to 7,000? Like, we went up really quickly in the midst of a war. That war is not over. The market's starting to question the nature of the valuation. Marvell gets 100 billion in a day because Jensen says they should go to $1 trillion. It's like, that's stupid. Like, we know that's stupid. Marvell doesn't have the earnings growth to justify that. Micron might have that. Meta might have that. So if Jensen says, oh, Meta should be 2 trillion, like, that kind of makes sense because we all think it should be. But like, when he says Marvell should be $1 trillion and then Marvell goes up to 250 billion up from 150 billion, it makes no sense, right? So I think the market's just coming to grips with like, hey, Marvell is going to be a great investment over the next 5 years. But in the next 5 days, we can't just give it a $400 stock price because Jensen likes it. And I think as a result of that, it's not to be bearish Marvell, bearish optics, bearish the necessity of this AI build out. It's more to be a bit sober about what is. I think the market's just sobering up, really. I really think that's what's happening. And, we might go green today and green for the next couple of weeks and we go back to just being vertical. But if that doesn't happen, then I think it's not bearish. It's more so just a healthy consolidation, which is going to suck in the short term because all of us are long a lot of these stocks. But it's the nature of markets. Put volumes are skyrocketing as well. QQQ and SPY. This is another reason I think this is not that bearish because once again, what have we said? This happened back in March as well. You don't get a correction, a really ugly correction when everyone is prepared for it. You just don't. It usually never, when everyone's loaded up on puts, that's not when you get the correction. It usually happens when no one's loading up on puts. And so in March, people were loading up on puts and we got like a 9% drawdown, but then it reversed so quickly that those puts became worthless as the market ended up like the time. It was not the time to be loading up on puts in March. It was the time to be loading up on stocks, right? So once again, that cataclysmic recession correction didn't really happen. If you want to call 8.9% cataclysmic, then be my guest. But realistically, that was the time to be buying. I don't know if this is the time to be buying because valuations are different than what they were in March, but I also don't think this is the time to be aggressively selling just because you're seeing put volumes go up. But nonetheless, put volumes are going up. And that could be a sign of things, a sign of the market just wanting to hedge. Once again, the SpaceX IPO is probably not as sobering as people would think, given the valuation there is kind of crazy. Anthropic's also going to get ready to go public in the fall. OpenAI already applied to go public a couple days ago. And, they're saying they're going to be strategic on the timing. I think OpenAI is going to pick late this year. I think OpenAI is going to realize, like, if Anthropic's doing it, SpaceX is doing it, then we need to probably take our time to do it as well. And that stuff could de-sober the market because there's just so much freaking liquidity out there. But at the end of the day, time will tell to see if there's enough amount of liquidity to even open up what the market is asking for, which is basically $200 billion on these IPOs. On top of that, and look, I'm a fan of NVIDIA. I'm a fan of the entire data center thesis, but this is a type of a headline that is going to make people wonder what the hell is going on. OpenAI is in talks to lease a massive Ohio data center. The deal will be a 10 gigawatt campus on federal land, 20-year lease, 10 gigawatts. It would be over $100 billion. However, the financial backing is coming from NVIDIA. And once again, I think you're going to have people say, wait a second, NVIDIA is backing a data center that could cost over $500 billion. And the reason they're backing it is because they know that OpenAI is going to fill that data center with NVIDIA chips. So NVIDIA has a ton of cash. Of course, they have the money, the credit facilities to back this, probably, way better in a credit position than OpenAI to be able to do this. But it's once again this game of, hey, we're going to give you $30 billion to set up this data center, begin the process, set up this data center. And then boom, you're going to give us that $30 billion back to buy the latest Vera Rubin chips to be able to, keep it going. Which if they get an ROI on that, it probably doesn't matter, right? That kind of defeats the circular financing argument. But until that ROI comes, you start to see a lot of people say, okay, this is once again kind of fueling the circular narrative around how these data centers are built, which is bullish because we want more data centers, we want more construction, bullish for all depiction shelf displays, but it's also, it makes you question why NVIDIA has to be the one to finance this in particular. Why can't other entities come in and maybe the other entities don't want to take that risk? Because obviously, they might not feel the most excited about the data centers coming into fruition. This was Stacy from Bernstein yesterday talking about why NVIDIA has been stuck and kind of the narrative around why that stock really has not been able to make a broader move.
If tomorrow NVIDIA announces that revenue goes from 85% to 120%, everything goes up. If it announces that revenue growth going from 85% to 40, everything's going down. So my question is, why is NVIDIA only up 14% this year and
it's a
sells
great
at a
question.
multiple that's much lower than a lot of these other companies whose entire businesses hinge on them?
It's a great question. It gets to what I said earlier.
And
about
I'm very upset about it because I own NVIDIA and I don't get it.
try not to be upset, but you're right. It's lagged. Now, to be fair, it's up. I don't know what it is.
It's up a crazy percentage,
fine.
whatever.
That's
I'm talking about this year.
There's a few reasons. So that is one. It had a big run already. Fine. Secondly, though, it gets back to what I said earlier, where I said AI was dragging all of these other segments along. And investors have been, rather than playing like the GPU or the compute names, they've been playing the constraints. Right. And again, remember what I said, for just to pick on memory, for example, some of the earnings revisions we've seen in some of the memory names, you've gone up an order of magnitude or even more in terms of the earnings power in the stocks. You're just not
because pricing has gone crazy.
Exactly. You're not seeing that kind of a thing from NVIDIA. And so the investors who love to play constraints have been playing the constraint names, and they've been going from one to the other. Like I said, memory to semi-cap to optical to power to CPUs. So that is part of it. And it's interesting because it brings up this very interesting divergence between the two, because one of them has to be wrong. To your point, the other stuff cannot work
if NVIDIA doesn't work. Impossible.
So that's why I think that there is an opportunity, because I do think that has to normalize one way or the other. Either the constraints are going to go down, or NVIDIA, I think, has to come up. The valuations, I think, have to normalize.
But there's no constraint on GPUs right now.
There is and there isn't. So there's leading edge logic and what's called CoWoS, which is the packaging technology. We can talk about that if you want to put the chips together. That's always tight. But NVIDIA and memory is tight. But NVIDIA has been very good at securing supply across the value chain. They saw this coming, right? So they've been very good at securing the supply that they need to meet the growth so they can accelerate.
By supply from Taiwan Semiconductor.
Taiwan, and also the memory guys, and also the packaging. And now we know he's getting into the optical and then securing lasers and all kinds of other stuff, right? But he's been very good at doing that. So they have supply. But this divergence has been very interesting. That's another reason it hasn't worked as well. And I think the third is just, look, I can't remember what the market cap is. It 5 trillion, 6 trillion now? So
it's over 5 trillion.
It's big, right? And it's, it's 8% of the S&P or something. And so for some of the large, like especially the large long onlys, it's hard for them to own more of it because they're already there. Yeah. It's even hard to be a market weight because it's so big.
So, like, the same narrative that we've been talking about for a long time, NVIDIA is a massive company. They're already so big. They don't have the type of pricing power that a Micron has right now. Micron also doesn't have NVIDIA's valuation. When you think about the ability for Micron to actually double or triple versus NVIDIA to double or triple from here, it's hard, considering NVIDIA is already up a crazy amount over the past 5 years. And so it is annoying, I think, to the broader market that NVIDIA can, barely stay above 200, 204 right here in the pre-market, and everything else continues to at least hold on to some of its momentum. But nonetheless, it is also a function of how big the company has become. And I think the broader question here is, like, what if NVIDIA actually takes a major beating and falls back into the 180s, 170s, which, I mean, could I see that happening? Yeah, I don't think that easily happens. I think maybe 190. I mean, we've held 200 in the past 2 trading sessions. We haven't really gone below that. So maybe if we do that, you'll see some buyers step in. But what does that mean for all the other picks and shovels plays that, Micron, the worst that got hit was 850. Really wasn't that bad. I mean, and it's bounced back every time. SK Hynix was up 10% yesterday. So you got all the memory names continuing to do very well, but it's not easily getting above 1100, 1200 like some people were thinking, because I think it's consolidating those gains. And the consolidation of those gains is, in my opinion, not the craziest thing in the world. Triple V, thank you for the super chat. Appreciate you, Triple V. Thank you for being here. Our boy Triple V did indeed have a bit of a heavy short position over the past couple of weeks on some of these sectors. And so that has obviously played out. If you've been in puts or had short positions, it's worked out in a variety of different ways, as a lot of these names. I mean, dude, Rocket Lab, 150 to 106. It's a pretty ugly drawdown. Now, granted, it went from 70 to 150 in what felt like basically 2 weeks. So as a Rocket Lab shareholder, I'm actually kind of like 150 was pushing it. I still don't know how you justify 63 billion market cap. I definitely didn't know how to justify 85 billion from the numbers. But that was a lot of momentum and exuberance and excitement. And it's consolidating. It's chilling out a little bit. And if it chills out in the low hundreds and is able to build a base here and normalize and have this value become an appropriate value to be paid for it, then I don't think that's the worst thing in the world. And I think you can say the same for a lot of these other names that have just gone super parabolic. But does it hurt to see it go down that much? I would imagine for most people, yeah, because those gains have disappeared, right? And it brings into question, like, how do people feel about buying other assets when those gains disappear? How do they feel about spending more money in the broader economy? This K-shaped economy thesis has always been contingent upon, if you feel you have gains, you're going to spend more money. If you don't feel like you have gains, you spend less money. And, that affects the broader market as well, which isn't the greatest thing in the world. So nonetheless, I think what's been happening over the past couple of days is not the start of something cataclysmic. Could it be? Yeah, just because we've gone so vertical that I could imagine we need a really heavy break, and that break could be an entire break in the market. It is a midterm year. That stuff happens. If this Trump-Iran situation doesn't come to an end, again, this morning the headline was Trump is getting ready to strike back at Iran, which we don't know what exactly that's going to entail. We don't know if that means the ceasefire is over. Like, we have no idea what exactly is happening here outside of Trump saying that Iran will now have to pay the price. But that, along with the market kind of digesting everything that's happened over the past couple weeks, could that lead to a bit more of a drawdown? Sure. But could it also just be a great opportunity for longs to get back in and ride it back up over the next couple of years? Yeah, I think so. But when we mean great opportunity, I think great opportunity is similar, or at least getting to April prices, maybe not March prices. March prices, I don't know if we're going to get Micron at 300 again. But April prices, you had, Micron at 650. Like, that would be like, okay, amazing opportunity. But because so many people know that's an amazing opportunity, I think before it gets to 650, there will be plenty of people buying it up. And so that's going to be the push and pull with the bulls and bears going back and forth to try to see, what ends up happening here. All right, let's get into some other headlines. Again, thank you everybody for the well wishes. I do have COVID. Went to the docs yesterday. As soon as they told me, I was like, really? COVID? Out of all things, COVID. But I'm happy I at least have some clarity now, because I was just so confused. I started feeling bad on Friday, and then yesterday I woke up. It was 4 days later, Tuesday, and like, I didn't know why I still felt bad. Usually this stuff doesn't last for 4 days, but usually the fourth day is the worst. And yesterday was pretty bad. Like, yesterday was horrible. Today I woke up feeling a lot better. So I think over the coming days we should get better and not have to feel too bad. But we're here, we're live, and we got a lot to see in terms of if this market can relax or if this is going to keep going. Yes, we do have another Knicks game tonight. Dude, game 3, we should have won that game. Like, that was like, we really should have won that. I was surprised we lost that game. So I'm hoping game 4 we end up taking. Because if the Knicks lose the championship by losing 2 games on our home court after taking 2 games on their home court, it would be the most New York Knicks thing ever to happen. But I think we're hopefully going to be able to win. And if we do, that would be a good thing. All right. Some of the other macro stuff that we got. Some of the other macro stuff that we have. Can you taste or smell anything? No. And I should have recognized that on Monday. On Monday, like, I was drinking like one of the electrolyte drinks, and it was like fruit punch, and I couldn't taste the fruit punch of it. And I didn't think much of it. I was just like, oh, whatever. And that's when I should have realized, oh, it's probably COVID, dude. Like, I've had COVID 2 times before. So that should have been my first window into realizing it's probably COVID. But yeah, I still don't have my taste or smell back, at least at the moment. All right. Couple of other core macro stuff that we've got going on. So first of all, let's talk about some of these individual stocks that are getting hit. Microsoft is now trading at the same valuation it was trading at as the COVID lows. Speaking of COVID, which is kind of crazy, right? Microsoft was at 470 2 weeks ago, now all the way below 400. Unfortunately, it has not been able to make the type of run that the street thought it was going to make based on this chip news, or based on the ability for it to, sell chips to Anthropic or stuff like that. And so you're starting to see a lot of these names get discounted more heavily. Meta is also getting discounted as well by 582. I got a filing right here from the SEC on Amazon. Amazon secures $17.5 billion senior unsecured delayed draw term loan facility. That's a lot of financial terms to say that they basically got another $18 billion bucks, which goes into the conversation around dilution and goes into the conversation around what the hell is happening with the big tech companies. I mean, once again, you've got OpenAI, Anthropic, and SpaceX saying that we need hundreds of billions of dollars to fund our business. Meta right there going down more in the pre-market, 581. Then you've got Google saying we need $85 billion to fund our AI build-out, Google at 361. And you've got the street realizing that Meta, Amazon, Microsoft are already levered up on debt. If they decide to offer things to the public, I mean, just how much money do people have to absorb all of this stuff, even if the absorption of these shares are for a good reason? Because if Google grows from 63% to 85% on cloud revenue, That's a reason to buy Google stock, right? It's a reason to own Google. It's just at what point do the shares become so much that the market is just like, we can't digest this, or we need prices to come down significantly in order to digest this. And really, Google from 380 to 360 is nothing, right? Meta, as much as it sucks from 680 to 584, it sucks, but it's not 2022 types of collapses. So we haven't really seen those unbelievable breakdowns that makes you just, think what the hell's going on, even though it feels like that. And I wonder if that needs to happen for them to absorb these equity issuances, or if the street can absorb it, at these current prices. And right now, we don't fully know. Yeah, this is a good point by Sam. Hood director Meyer Malka bought over 50 million worth of shares over the last 7 days. This has been very surprising to me. It's almost like the insiders at Hood know that something's happening here, even though, fundamentally wise, Hood is still contingent with the market right now, right? And because Bitcoin has been horrible, obviously that has been tough for Robinhood to be able to get a meaningful bid, although it's not in the 60s and 70s anymore, which is good. But you are seeing a pretty decent amount of insider purchases. And I think part of this might be because of the agentic trading, the Trump accounts, and the broader diversification of Hood from just being in proxy to the markets. Unfortunately, most of the revenue right now is still in proxy to the markets. We did have May metrics yesterday, and they were really good. The problem is, and this is more of a nitpicky thing around the broader markets versus a problem with Hood, is take a look at these numbers, okay? So equity notional volume, 315 billion in May. In October of 2025, I don't have to repeat what happened in October of 2025. We were all there to experience it. It was 320 billion, almost identical. Options, 231 million in May, 267 in October, the highest we've had since October. Event contracts, October, it wasn't as big of a deal, but we had 3.9 billion. October was about 2.5, and then crypto just wasn't able to pick up. So equities and options are the same or very similar to what they were in October. And it makes me wonder, it's great for Hood, but it makes me wonder, October is when we had a short-term top. October is when the soybean comment came out, crypto got liquidated, and we ended up chilling out for about 7 months until we got a bid again. Does this moment in May reflect the type of exuberance that we had in October, which is great for Robinhood's business, but it might not be great for the equity markets because there's just too much of it in the meantime? Now, the difference between that and then is that crypto was like, Bitcoin was at 100,000 back then. Now Bitcoin's at 60. So you've got something that's already kind of capitulated, hopefully to the downside. Earnings growth has been way more substantial since then, which is why total platform assets are at 377 billion. This is not because of net new assets added to the platform, because you only had about $6 billion in deposits on Robinhood. This is because of, quite frankly, I think AMD. I think AMD having the monster month that it had, AMD is now a top 10 asset on Robinhood. That going up by basically 50% led to the assets theoretically going up by a proportional amount as well, because so many people have AMD on Robinhood. And as a result, you've had gains from the equity markets help the underlying metrics for Robinhood. But if you get that catalyst like you had in October, which was the soybean tweet, which then led to the China issue, crypto liquidation, and then we ended up topping out for a bit, I wonder if that could happen this time. This time we have a lot more leverage in the system. China, by the way, is getting into the leverage. Even though we have a lot more earnings growth, I wonder at what point does the earnings growth narrative not really correspond with the market, because the market's just like, okay, cool, good earnings growth, but give us a cheaper valuation to buy these stocks at, even though theoretically we could pay more because of the earnings growth, but we kind of don't want to. And if we don't want to, then we're going to have to, wait and see until how much more we get for paying up for these valuations. Qatari delegation arrives in Tehran for mediation. Okay, so Qatar officially arrived in Iran trying to resolve what's going on right here. Not sure if the Qataris can figure it out, but maybe they can. The Pakistanis couldn't. The Israelis obviously can't. JD Vance and Jared Kushner and Marco Rubio obviously don't know how to negotiate. So maybe the Qataris can figure this out and we can keep going from there. China retail margin trading, absolutely crazy. 431 billion. Now in the United States, it's about 2 trillion. So it's still a lot lower than in the United States, but the figure has doubled over the past 2 years. And this is surpassing the 2015 Chinese stock market bubble peak of 354 billion. So you've got margin across the entire world. Obviously, South Korea is crazy. The United States is crazy. But now in China, risk appetite. And by the way, they're not buying Alibaba here. The degens in China are buying NVIDIA and Micron. Like I don't think they want to buy Baidu and Baba and JD. I think they want to buy US American tech stocks that are going up every day. And that just leads to a lot more money, coming into the broader system. Yeah, Karp will be on CNBC soon. I'll pull him up as soon as he's there. I didn't know he would be on today. And so we'll see what he has to say. But we will get there once he's on. The 10-year, again, that is spiking up as CPI continues to be bad, 4.2. This was the worst print since April of 2023. Worst print since April of 2023. Markets kind of cared, but not really. We'll see when the market opens if they end up caring the most. Senator Warren seeks SEC review of the SpaceX IPO. Senator Warren has urged the U.S. Securities and Exchange Commission to delay SpaceX's IPO. Okay, that's not going to happen. I don't think Elizabeth Warren should be trying to save people from the SpaceX IPO. If you buy the IPO and that thing collapses, that's what our friend Josh Brown calls tuition, that we've all gone through. If you buy something at $2 trillion that probably isn't worth $2 trillion and it goes to $1 trillion, it is what it is, which I don't think it's going to fall 50% or anything like that. But this is one of those things where, the market is the market and politicians can't save you from buying something that's overvalued. Nonetheless, I think we can all comprehend that it obviously is commanding a pretty heavy valuation. Microsoft right there, that's down about 1.3. Marvell down about 1.84. Dude, Marvell's been crazy. Got into the S&P 500, topped out at 330, came all the way down to 244, now at 261. It was at 220 before Jensen had that $1 trillion comment. So I think the street is still thinking, but there's about $45 of us not knowing if Marvell really does deserve to be at these levels. It's at least been de-risked from the 330 level, but still, could this thing fall back to the 220s, 230s based on the Jensen comments not being enough to convince the street? Maybe. But this one's also been a ride back and forth. What was your big tuition a bit? PPBT, Purple Biotech. Are they still public? They are still public. 3 million market cap. If you look at the max chart right here, this was my tuition, bro. This 2020, 2021, that was my tuition. I was like, hold on, I'm buying a company that's going to solve all the world's diseases. I literally would tell myself, oh, if I buy another 1,000 shares, these 1,000 shares will be worth like another $10 million in 5 years. Like that's the type of stupid shit I was telling myself when I was buying my get rich quick stock. And then I realized I had the wrong P. The P that I was looking for was Palantir, not PPBT. But I had to go through PPBT to find Palantir. So the point is, look, I don't think SpaceX is going to collapse 90%. I just think $2 trillion makes no sense. Like we know it makes no sense. It's just like, and if people want to pay that, then okay, pay that. But like you have 7 or 8 $1 trillion companies. A couple of those are barely able to hold a multi-trillion-dollar valuation. And the ones that are doing it, Microsoft, Google, and NVIDIA, are printing unbelievable amounts of free cash flow, net income, and operating income. SpaceX has none of that. And they want to get into that club of 3-4 trillion, which is the only reason you'd be buying it at $2 trillion. And it just makes you wonder, what exactly is the broader argument here. Nonetheless, SpaceX is still pumping it, right? I mean, they said last night that orbital data centers are likely going to be coming pretty soon by 2028. Elon has been putting out multiple different podcasts, and this is one of the clips that he said yesterday. He thinks space is really big. There's a lot of different opportunities. It's just how long is it going to take for those opportunities to be capitalized on, and how much revenue is going to come from that in the short term?
Yeah, space is really big. So it's not like space is going to get crowded. Space is enormous. Like if you zoom in close, the satellite looks big, but if you actually look at it relative to the Earth, these satellites are so tiny you can't even see them. So they're very, very tiny compared to Earth.
And I mean, we have about 10,000 Starlinks in orbit right now.
Yeah.
We've got a pretty good idea of how to operate just really large constellations and do it safely now, right?
We are the only operator that has any experience to that scale. It's a great thing that we have this background, so we know how tightly we can pack the satellites. And
yeah, space is really big.
Here's the thing. In the United States, the reason we have all these amazing companies is because you have all this risk capital that's willing to fund the craziest ideas in the world. like SpaceX was 20 years ago, and give it the capital it needs to be able to succeed based on the promise that eventually an entrepreneur with a massive amount of hustle and innovation and excitement like an Elon Musk will be able to take you to the promised land. That's totally fine. The problem is the inevitable exit that happens because of that risk-taking capital that funded the dream 20 years ago has to be dumped on somebody. And so you can agree with the pursuit of SpaceX, the mission of SpaceX, the value of Elon, everything he's doing for humanity, yada, yada, yada. And you can disagree with the freaking valuation because at the end of the day, it's your hard-earned money being put into an asset class that maybe it goes up for the hell of going up, which we've seen a lot happen this year. And it pisses people off when Microsoft and Meta that have massive $100 billion cash flows aren't doing anything. But nonetheless, it's also like you can agree with the company, but you can also disagree with the nature of how the valuation is being put out there into the world. Like even Anthropic, I think Anthropic's amazing. Claude is incredible. I don't think that thing is worth $1 trillion, losing the amount of money that they're losing right now. And if they can increase their margins, which is a very hard thing to do because they either have to increase costs with the cost of their data center capacity, which is not an easy thing to do given data centers are getting more and more expensive, or you have to have customers that are willing to pay an increased amount of cost in terms of token usage because they're getting so much value. But I think if OpenAI was public or Anthropic was public, they would have the 10, 15, 20% swings that all these other stocks are used to. If NVIDIA can fall 10% in a day, 5% in a day, why can't OpenAI or Anthropic? So in the private markets, yeah, they get to be worth what they're worth. But when they become public, the street's going to have their way with them and see if these names are able to actually hold on to the multiple that they have. Now, the growth is crazy for a lot of these companies, but I think at some point also the market's like, okay, growth is growth. We get it. But at what point are we going to stop? Like there obviously is a bright line to what you pay, right? Like if SpaceX was IPOing at 5 trillion, would people be buying it? If Anthropic was IPOing at 3 trillion, would you buy it? Like there has to be some level of like, no, enough is enough. And maybe that 1 trillion, 2 trillion number is enough to get people to be like, all right, I'll invest. But at some point, there is a breaking point. And I think the market is testing the limits of that breaking point with a lot of these public market valuations and private market valuations. And, time will tell to see if that breaking point ends up being more aggressive or not. Meta, Microsoft, Amazon looking so cheap. Are they long buys? Yeah, but, we've been saying this all year. Meta, Microsoft, Amazon are incredible buys. The problem is those stocks aren't moving. So you have to be able to buy these names assuming that the long-term the fact that Amazon 277 down to 242, basically the entire earnings pump destroyed. If Amazon's your largest position this year, it hurts, right? Because all these other smaller rinky-dink companies that are building the nuts and bolts of the GPUs, they're going up to the moon. And then Amazon, which is like one of the most important companies in the world, cannot catch a bid. And so, yeah, is it a great buy? I think so. I think all the Mag 7s outside of Tesla and Apple are probably really good buys, maybe excluding Google right for now, just because they're basically trading at all-time highs. But you have to be okay with just staring at like watching paint dry, because they're just, it's not where the alpha is. And I think that's been a big lesson to everyone this year. The alpha wasn't in a name like Nebius, the alpha was in a name like Applied Digital. It's just, there's not a lot of people. A lot of people don't have the stomach to hold some of these smaller companies. It's really easy to hold a Meta or an Amazon. But if you had to hold a Applied Digital when it was 4 billion, now it's 12 billion, 300% return, incredible. But did you want to have that much in an individual stock? And some people don't have that type of capacity to risk manage as easily. Palantir losing 130. They got outperformed by Baird yesterday at $200. The fact that this is losing 130 is incredible. IGV, once again, falling off a cliff. Reddit went up yesterday, and then it went down, but then it went back up, recovering a little bit. It should be probably closer to the 160s with the software sell-off, but the reason it's holding 170s is because of the upgrade it got from Piper Sandler. So looks like Q2 is going to be really good for Reddit. But, AppLovin got hit. ServiceNow got hit. ServiceNow was pushing 140 2 weeks ago. It's back to 104. Like, it's some of this stuff is just unbelievable. But nonetheless, if the entire market's going to correct and the software sector is part of the market, because it doesn't have these massive, like Micron going from 900 to 800 or 1,000 to 800 is like, okay, 20% drop, that sucks, but it's still up a lot this year. ServiceNow going from 140 to 104 sucks because, yeah, it's up from $80, but most people started really buying it once it got to the breakout around 95 to 100, and they were rewarded, and then it was taken away because the entire market's falling down, which is why the picks and shovels have once again been the core theme of this market. And now it's going to be up to the market to say how long we want the picks and shovels to continue being the theme that, that continues to do well. SMCI is down because they diluted by about 7 billion. So that's why you're seeing a 12% drawdown right there on SMCI. Bloomberg, rising interest rates and higher stock valuations are making it more attractive for companies to issue equity while a queue of mega cap IPOs are building, but history suggests that waves of new issuance are bad news for stock market rallies. Yeah, I don't even think you need any historical precedent to understand that dilution in general is not the best for markets, but it also might be what's needed, because if Meta needs to keep building stuff out, if Google needs to keep building stuff out, they're going to need to get the money from somewhere. And I think that could put a short-term pause on some of the rally that we're seeing, but it also, at the end of the day, is the important thing for them to do. Trump's going to be live at 10 a.m. He's going to be signing the Secure America Act. What is the Secure America Act? Funding ICE and Border Patrol. Okay. So Trump will be live at 10, signing a new act. Again, the update on the Iran situation today, we do not have really any meaningful negotiation. This is what Fox said this morning after they talked to Trump. It looks like he's thinking of more strikes later today.
Now, interestingly, President Trump told me that he is getting close to ordering new strikes against Iranian power plants and bridges, because he says the Iranians are tapping the United States along when it comes to the negotiating process. He says the bully of the Middle East is dead, and he told me I may keep going when I asked him about a possible response to the...
All right, so that's what you got from Trump. That and CPI not being as good as we wanted. I mean, it was in expectations. It wasn't below expectations. That, along with oil, still up a bit on the day. Let's do a red or green poll in the chat. I am curious, what do we think? Do we actually have a second day of red here? Last time we had it Monday, we recovered. And then yesterday we got it. Usually we get a day of recovery, at least in the past few weeks of rally. I wonder if today we end up actually seeing that. We are red pre-market. Yesterday was also interesting because yesterday we hit 746 on the S&P. Like Robinhood went to $88. Like we were up. Like I was looking at the charts and I was just like, oh my goodness, like we're breaking. And then within like about 30 seconds it cracked. And that crack immediately led to the downturn. As you see right here, we hit 746.90 and then boom, 722. And that's why I think yesterday felt so violent to people. It felt like a repeat of Friday, because you're taking the elevator down and it's going down aggressively within an hour. And as a result, every single stock has to fall when that happens, outside of, the value names that we're getting the rotation. But Nebius hit 204, Palantir 128, NVIDIA was like $1 away from going below 200, Rocket Lab 102. Like it got very ugly across the board. Marvell was at 244. Palo Alto, CrowdStrike. Where did CrowdStrike end at yesterday? CrowdStrike ended at 644, got to 617. And so this market 100% is contingent on everything going up into the right or everything going down. And if we see the indices break, if we see different sectors break, then those names in those sectors get hit. Broadcom right there, 387. That's down another 1.2% in the pre-market. CPI did come out 4.2 versus 4.2 expected. So at least it wasn't worse than expected, but unfortunately worse inflation since April. Every time I say that, I feel like it should hurt more. It doesn't hurt as much knowing that the 60% of the reason, once again, was because of energy. And so that could be resolved if, quite frankly, they sent me to the Middle East to get the deal done. But, until they do that, we're going to have higher inflation. But I think the market knows that eventually, hopefully, this deal will be done and that 60% will go down to like 20%. And we're going to see inflation come back below 3%, if not by the end of this year, by early 2027. But what's his name? Kevin Warsh just can't cut until there's even a chance of that happening, which is the the broader problem. If you go, you'll call out sick. Dude, I'm annoyed. Some people are questioning my work ethic. Like, that's one thing I take pride on. I have missed maybe 5 days in the past 4 years on a meaningful, like, oh, I'm sick type of thing. Like in the past 4 years, since 2022, since I've done this, maybe 5 days, maybe. And yesterday was one of them. Any other day that I've missed, it's been traveling. Like literally I was on a flight and I can't do it. Outside of that, I don't take sick days. Like I legit think it's 5 days. I need to like go through it and see the days that I've missed. Maybe it's 6. More likely it's closer to 3 or 4. But no way that's cap. I don't think that's cap, dude. I don't miss days. I know it feels like it if I'm traveling a lot or if like a couple of days come together, but a lot of that is just really due to traveling more than anything else. Not because I don't want to do it. Like if I'm awake and I can do it, I can do it. Like I'm here today because I want to do it. Yesterday I didn't want to do it because I couldn't talk. I was like, it is like the idea of sitting and trying to analyze stuff it felt horrible. But I was, aching to talk, and now we're here. And hopefully we just got to see how these markets ultimately. It was kind of funny though that we went red yesterday because I had tweeted. I was like, let's not have what happened on Friday just because I'm missing the day. And then I look up and I'm like, this can't be happening. But it ended up happening. So, Ori says before the war, CPI year over year for February 2026 was 2.4%. Wow. So theoretically, if that war can get resolved, maybe that CPI can have a meaningful collapse. We're going to see. We're going to see how that ends up playing out. And we're going to keep going from there. Admit, did you get COVID? Yes, I did get COVID, but I am feeling a lot better. Danny says the problem is no one approved these 6 days. That's true. No one approved these 6 days. But we're back. We are back today. All right, what do you guys say in the poll? Red or green? 68% say red. All right, so the majority of you are thinking we continue the red. I don't know. I am interested. I honestly don't know today. I think today is going to be a little icky back and forth. You got a lot of different corresponding variables. If we have a massive green surge, I think a lot of money comes back in and says, okay, that was our dip. We got to buy. That could be a head fake. If we get a lot of red, maybe we get some dip buyers coming in as well, saying enough is enough. We're not going to breach the lows from yesterday. So today will be an interesting one. We're going to see what ends up happening, and hopefully we get some more answers in terms of how this is playing out. All right, here we go. 10 seconds. 10 seconds until once again we introduce what is needed in all of our lives every day at 9:30 a.m. Ladies and gentlemen, the stock market is once again open. All right, wake your ass up. Let's get into it. S&P, you do have a green candle. We are down 0.43%, which is not as bad as it was before CPI. Before CPI, we were 0.82%, but it is still red. Let's see if that flips back down to 730, which was the pre-market low, or if we can hold 733. Robinhood, 1.7%. You did have another insider buyer yesterday of 250,000 shares. That stock up 1.4%. Robinhood green in a sea of red. It's almost exactly what happened yesterday. Robinhood got up to 88, and then it fell pretty badly. But Robinhood literally green in a sea of red. IGV, that's down. Reddit, that's down 2%. ServiceNow, that's down 1%. CrowdStrike, down 0.5%. Broadcom, down 2.4%. Oscar, also green in a sea of red. $28. Congrats if you're in Oscar. It's been a tough hold over the past 8 months, but it has absolutely broken out right here. $28.60. That's up 5%. UNH, I would imagine, should be up. UNH is basically flat, but holding 412. So the healthcare names is Tempus up, are coming back. Tempus also, it's down about 1.4%, but it's up from a few days ago. Oscar again, 28 is Iren green. Iren is also green. Interesting. Nebius is not, and CoreWeave is not. Iren, Robinhood, and Oscar are 3 of your more green names today. Reddit, that's down. Microsoft, back to 400, but still red. Rocket Lab, 107. NVIDIA, 205. A little bit of green candle, but still red. Meta, 583. Again, little green candle, but still red. SMCI down 14% on a $7 billion dilution package. I think like $4 billion is ATM offerings, and then the other is debt. Might be a little wrong on the exact specifics of it, but it is about $7 billion of collective dilution, which is about 25% of their market cap, and that's why I think the street's a bit upset. Micron 913, that's down 2.3. Palo Alto, that's down 1.3%. Qualcomm down 1.5. Qualcomm fell from 220 to 192 yesterday, even after Jensen told everybody to buy Qualcomm stock. So even with his announcement encouraging people to buy it, stock still took a pretty ugly dip. And so I think that was the market kind of just rejecting it and saying, we're not believing in this endorsement yet. Palo Alto 258. Bot RoboStrategy, that's down 6.3%. Duolingo, that's down 0.5%. Marvell just flipped green for a second. Now went back red. Still seeing a decent amount of red across the board. Robinhood 87.16. It's hard for me to trust in the hood pump when everything's red, which is exactly what happened yesterday. It got up to 88 and then boom, came back down to 79. So I feel like either everything's going to catch up with it or hood might go down. If it stays green independent of the market, that'd be pretty impressive for hood. But 87.26, that's up 4% right now on the day. Inflation again, CPI was 7.3, 4.2. So it was not as bad as the market expected. It was obviously bad when it comes to, the past 3 years. But if it was more than 4.2, then it'd be a lot worse. S&P 732, not really too encouraging. We need to see that above 735. Otherwise, those lows of 730 in the pre-market might be in play. Palantir below 130. That is down. Walmart is up a little bit. You got Grab that's down 0.5%. Nubank that's down 1/3%. AMD took a 16% haircut at one point yesterday. 546 to 468. Yesterday went from 498 to 437. Now it's back to 468. But this one has also been subject to a pretty aggressive level of volatility to the downside. Banks are up. Okay, banks should be up because people should want a little bit more safety if their high beta names are down. Also, banks should be making a lot of money off these fees when it comes to the IPO. So I've been surprised why the banks haven't been moving. Wow, Microsoft, 397. I mean, this is pretty freaking incredible. This was 470 2 weeks ago. It just makes you wonder how the market's thinking of this name and why the market is acting the way they're acting on, one of the most important companies that's out there. But that one obviously taking a pretty ugly hit right here. CPI again, 4.2%. Fluence, is that one up today? Fluence is up 9%. They had a partnership with NVIDIA, I believe, a week ago. So that's been decent for them. SoFi, 16. At least SoFi's been holding that kind of 16.20 to 16.30 range. Meta continuing to take a hit. Tempest, that's up a little bit. That just flipped green. Strategy, STRC at 96. It was at 94. Whereas MSTR, 117. Sailor did buy a bunch more Bitcoin. Robinhood, 86, just below 87. Oscar, wow, almost 29. It kind of feels like there's a rotation into defensives that are still growing. And Oscar is, decently growing, great fundamentals, obviously a defensive when it comes to healthcare. Same thing with UNH 413. And then obviously AI is also a big tailwind for the healthcare sector. So that could be part of the reason why those are getting some outperformance right here, potentially rotation. Nebius just goes green. Nebius had an event yesterday called Inflection in San Francisco. I don't have too many highlights from the event or too many clips from the event yet, but they talked a lot about their ambitions to become the next big hyperscaler cloud. And so thought it was a good event based on some of the stuff I saw, but ultimately the streets just got to figure out, is the valuation on the Neo Cloud something worth paying for? Corby, right, they're still 96.80, below 100. Oscar got an upgrade today. What's the price target on their upgrade? Is it in the 30s? I would imagine that could be, wow, yeah, Barclays, 35. Okay. There you go. Reddit got an upgrade yesterday too, and that's why I went green, but then obviously the SaaS apocalypse kind of took it back down. 173, down 2.3%. Keel, I like this one. It is a small speculative position for me, but I like it. I think they have the data center capacity to get a deal with one of the hyperscalers. $3 billion market cap. I think it can get re-rated to about $5 or $6 billion. Also, there's a lot more signs than not that Amazon would be the company they sign. If you just look at the locations of their data center versus the locations for where Amazon is hiring engineers for, it almost matches up exactly. And, the data centers are built for Vera Rubin. So small speculative position. We'll see if this one ends up playing out, but they need to get a deal. APLD got a big deal the other day, Monday after hours. That's why that stock took a big move up. So in this market, those deals are what really create everything. Wow, Hoodie, 88.40. Interesting. Credo as well, 250. That's up 7. You're seeing some green candles start to come in, folks. Let's see if that can happen on the broader market. Microsoft just hit 400. Amazon still pretty red on the day. Amazon not moving too much. Broadcom as well. I was about to say BroadStrike. Broadcom pretty much at the lows of the day. So that one's not flipping. NVIDIA is flipping a little bit. Nebius 224. Okay. Are we seeing it? Rocket Lab just went green. Meta just went green. SPY finally 734, 735, I think is where bulls want to healthily see this. Duolingo 120. That's pretty incredible. Even after the Apple series stuff, Duolingo is green. Apple 289. That's still flat. Is Palantir red? Palantir is still red, but at least it's up from 129. Carp's going to be on CNBC in a bit. And we'll listen to what he has to say. Lemonade, that's up as well. All right, 8 minutes into it, you're seeing the green candles come in. The question is, will they stay? Oracle, I'll be live tonight with Jose, Tanner, and Neil, and we will be looking at Oracle's earnings, 203. This is going to be an important one for the broader data center space. It has pumped a lot from the April lows, 135 to 203, got up to 220 the other day, but now at 200. Wix is still down. Again, they put out that file. They're slowing down on their bookings. And so that's why the stock's been getting hit. ASTS back at 90. Corning, 177. Could we actually see Hood at 90 today? It's pretty freaking close. Where's Nokia? 1380. This fell to 1318 yesterday. BlackBerry as well. 910. That fell to 820 yesterday. So yesterday, again, was just pretty aggressive on the drawdown for a lot of these names. Did Trump just tweet? Trump. Wow. Citi was ranked #1 in topping M&A advisory market by value in Q1. Congrats to Jane F. and all of our great people. They've worked really hard. Big comeback for Citi. All right. I think we know what Trump is long. We know what bank is he's on the side of. There you go. That sounds like such a commercial. Citi was ranked #1 in topping M&A advisory market by value in Q1. That literally sounds like something I would hear in between segments on CNBC. But there you go. Citigroup still flat on the day. This one, to the truth value of what Trump is saying, has had a massive comeback. I mean, people thought Citi was dead 4 years ago, and it has had a crazy comeback. The way they've increased their tangible book value, M&A, leadership changes. I mean, they've done a really good job. It's basically outperformed every other bank over the past 5 years. Credo, that's up 5.9, and then Nebius, 224. 224. Where's BTC? Bitcoin, we got a $1,000 move, folks. It was at 61. Now it's at 62.1, $1,100 move. So at least you're seeing Bitcoin participate. AMC, is that going up? AMC is up 4%. The headline on AMC last week was they had the highest attendance since 2019. What movie? Obsession and Backroom or something, whatever those movies are, that's causing it. I still don't know, why those movies are such a big deal, but apparently they are like just killing it in the box office. So maybe that's part of the reason why. Oh, you know what I started watching last night? Started watching Boiler Room. I didn't finish it, but I started watching Boiler Room. I'm going to try to finish it today, but it's a good movie. Exciting. All about the stock market. So looking forward to officially having to say that I've watched Boiler Room. ServiceNow, 108. That's also green. That is also green. Yeah, the Michael Jackson movie too. That probably, that helped. It's just, I've been seeing more like Twitter commentary around. The Michael Jackson movie's been out for a while too, but the Backroom and Obsession thing, I can't believe they put out horror movies. people are going crazy over it. But I guess people really like it. Robinhood, she's trying right here. She is trying. ServiceNow with a nice rebound, leading IGV, 89.62. Wow, NVIDIA got rejected at 207. See, this is the thing, man. 207 immediately. Look at that red candle right back to 205.70. Usually when that happens to NVIDIA, that tends to happen for some of the other names. I wonder if that's maybe just an NVIDIA thing. But that one got stopped right in its place. Nebius got hit at 226. I can pretty much bet that was at the same time NVIDIA got hit. Nebius was a minute ago. NVIDIA, yeah, a minute ago. All right, NVIDIA kind of calling a little bit of the potential short-term top here, or maybe this is just algos, and if NVIDIA can break back above 207, then the rest of the street can break through. It's kind of funny how that happens, but NVIDIA is a big part of this market. Lemonade, 9%. Did we get it 90? Did we get it? Okay, there it is. This feels a lot healthier than yesterday. Yesterday, as soon as it hit 88, we topped out, and it fell $7 within the next 20 minutes. This one looks like it has some legs right here at 90, unless the broader market taps out. Even Palantir 130.64, SPY 735. Okay, so why is NVIDIA struggling? Dude, that's got to be an NVIDIA thing then. Maybe it's affecting some of the semis, but SPY is hitting high of days, about to go green. We're $1 away from going green on SPY. And NVIDIA is, acting like it's at the lows of the days. SoFi, green. Bank of America, green. Iren, green. Oscar, green. Broadcom also selling off. Okay, so that's large cap semis then. I bet TSM is down. If Broadcom and NVIDIA are down, yep, TSM down 2.3. All right, so that might be isolated to the large cap semis. Maybe the rest of the market doesn't have to worry about that today, which is, not the worst thing in the world. And some of these other names can get some green. CoreWeave, 99, that's green. Robinhood, 90.93. Almost giving us 91. It's 10 cents away. Let's see if it can get there. Very close. Corning, that's up. Fastly, that's up. Quantinium, that IPO, that's down about 2%. SanDisk, that's up 1%. Micron, there you go, 91 on Mr. Hoodie. Is oil down? Oil is still up below 90, 89.45, but still up. That's a big move on Hood. 9%, and Bitcoin's flat? That's a big freaking move, dude. Maybe that's because of the May metrics, which were really good. Maybe that's because of the insider buying. SPY 736. Are your photonics plays coming back? Your photonics plays are coming back. Lumentum, it was down 10% yesterday, 865 right there. That's up 5%. AAOI, the options flow on this thing has been crazy. People are buying $300 calls a couple months out. So AAOI, the option flows on that have been pretty aggressive. But I think part of it is because of Jensen's endorsement of Marvell and optics and all that stuff. Marvell should be up right now. Marvell is struggling to go green, but at least it's not at the 250s, 267 right there. Is ELF making a move? ELF. Wow, ELF is also up 5%. Seen a lot of names outside of tech get some love here. Question is, can they hold it? NVIDIA once again below 206 as the S&P is at the highs of day. Oh, Cracker Barrel did have a good earnings as well. What's their ticker again? I saw it yesterday. Market cap on this thing is, this is a restaurant for those that don't know, $1 billion. 34%'s a little aggressive. But again, it is a small company. I guess the earnings were really good for. I've been to one Cracker Barrel. No, I've been to two. One in Vegas and one in Kentucky. It's good. It's not like that crazy though. It's not like unbelievably amazing, but I guess the street liked the earnings. There you go. Lemonade, that's up 10.5% as well. Micron, 928. That also continues to be green. Robinhood's making a move because it was made an underwriter for IPOs. The news dropped yesterday. Yeah, I saw that from Vlad. I think that's bullish. The issue is, look, they have to underwrite really good quality IPOs, and that takes time. So it is a good piece of news because they can essentially underwrite IPOs and then issue shares to retail so that, you know, they don't have to fight to get allocation. But then it begs the question, like, what are the IPOs they're going to be underwriting, right? If they underwrite some shitty, overvalued company, then who's going to care about it, right? So they can make more fees off of that, which is good for the business, but it also depends on how good. Like, if Robinhood could underwrite the SpaceX IPO, that would be a massive tailwind. Obviously, they're not going to be able to do something like that, but in the future, maybe they can. So that is good news. I don't know if it affects the earnings anytime soon, even though it's bullish. But then again, the market might just be taking hood up because of that news, regardless of if it affects the earnings. Lumentum right there, 877. As that continues to go up, is Amazon red? Amazon, oh my goodness, it's about to lose 240. Is Microsoft back below 400? Microsoft is fighting. Microsoft 403. It's about to go green in 30 cents. Cheesecake Factory, that's up. All right, so you got Cheesecake, Elf, and Cracker Barrel. What about Texas Roadhouse? That should be up maybe. Texas Roadhouse is flat. Shake Shack got hit a couple of days ago as well. Oracle 209. Nice big green candle right there. Hims 2942 trying to go for 3 for 30. Intel had big news with Google. We talked about it a couple of days ago with the 3 million potential chips that Google is going to be licensing or calling on Intel to be able to build with their foundry. And then NVIDIA is working with them for advanced packaging. So Intel needs a lot of these deals. They obviously have the SpaceX deal, which is very important for them. But Intel's holding that $550 billion market cap here. Redwire diluted again yesterday. I was surprised, bro. It was down 20%, but they diluted by 300 million a couple weeks ago. Then I think yesterday was 500 million. So obviously, and that's like a healthy part of the market cap at 3 billion. So they've been diluting a ton. But I mean, obviously, if that helps them grow the business, then shareholders should be okay with it. 31, Credo, 9.8%. 9.8% here. Okay, I mean, this is definitely feeling like a rebound from yesterday. Now, we had this for a little bit yesterday before we got hit. I think today it's going to be harder to get hit, given how bad yesterday was. Even if NVIDIA is not moving, S&P very close to going green. And, we don't need to get back to 745, but if we can at least hold green today, maybe that's enough to not get hit pretty badly. Bank of Canada, they kept their interest rates the same, 2.25%, which is probably what we're going to do at the next meeting. When is the next meeting for us, by the way? Is it in June? It's in... Oh, shoot, the next meeting's June 17th. It's literally next Wednesday. That's going to be Kevin Warsh's first meeting. Wow. That's going to be quite the spectacle. And I guess the market's going to have to potentially test him as the new Fed chair, but it's going to be a very important one to see kind of how he navigates questions around inflation. NVIDIA again below 206. Bank of Japan is probably hiking. Does this mean we're getting a rate cut? No. This does. So Bank of Canada and the Bank of Japan doing stuff does not affect the United States decision. The only thing that affects our decision is the rate of inflation and our unemployment rate. And right now, inflation is way too high for a cut, even if it's based on a war. The thing is, even if Kevin Warsh wants to cut, which he is naturally a hawk, so I don't think he wants to cut. But even if he wanted to cut, the rest of the committee members, Waller, Hammock, there's just no way in hell they're going to let him cut. So until he can get unanimous support or close to unanimous support, it's going to be tough. But if Trump could end this war, oil could go below 80. I mean, like, you're going to have a pretty compelling case. It's just by the end of the year, do we think that's going to happen? Galaxy right there. That's up 1.9% as well. Kevin Warsh is a new way of calculating our inflation, brings it down to 2.4%. He's excluding temporary market pop. So I agree. Kevin Warsh is trying to change the regime of the Fed from being looking from basically using lagging indicators to determine real-time market action, which, you know, theoretically, I think the Fed should give a contract to Palantir because they could help pretty quickly with looking at real-time data. But the problem is, it doesn't matter what Kevin Warsh unilaterally tries to do. The Fed is an institution. If he cannot convince the other 12 committee members to look at the data the way that he's looking at it, he's not going to be able to just unilaterally cut rates. So he's going to have to be a compelling salesman more than he's going to have to be a newfound economist to be able to convince all of those people at the Fed that have their own ideological biases on why we should be looking at inflation in a different way. And I just don't know if he's going to be able to do that, because it's not easy. All of them are independent, you know, for a reason, and they all have different constituents. And many of them, quite frankly, are political. And so it's one of those things where, as much as I hope he can try to reform the Fed, I don't know if he can convince the entire committee to change their perspectives. Amazon right there, 240.3. That's down 1.5. Robinhood losing that 91 move. It got to 91.50. Now we're at 90. Hopefully we can at least hold on to that 90. The rare earth name's getting some love. The director, I think it's the CEO of MP Materials. He bought 100,000 shares yesterday, if I'm not wrong. Was it the CEO? I believe it was the CEO. Yeah, 100,000 shares. So you do have some insider buying for MP. By the way, Bill Gates is doing a closed door testimony around the Epstein controversy today. So we might get some headlines later today on that from Bill Gates. Did Amazon take more credit out? Yes. Amazon levered up 14 billion of Canadian dollars 2 days ago, and today was another 18 billion of money in a unsecured loan-term facility. Broadcom, wow, 490 to 373. Who bought the dip on Broadcom? Is Broadcom the one that we take a stab on here? I thought the earnings were exceptional. I thought the earnings were really freaking good. So I was surprised to see it go down that much. I know they didn't raise guidance, but I mean, could you imagine if NVIDIA didn't raise guidance? Like, it is hilarious. NVIDIA would be at 130 if they didn't raise guidance. I mean, like, if it's that serious to raise guidance, they just took her down off of a very small guidance. I mean, I know the gross margins got hit a little bit because of the software business, but that's not the story on Broadcom. Now, they are losing part of their, like Google is not using them as the sole supplier. I think that was another part of the narrative. Google's still going to be using them for a lot of TPUs. So the idea that, you know, they didn't lose Google, Google's diversifying, as Google should. But I think that was part of the narrative that also took them down. I see a decent amount of people saying they bought the dip on Broadcom. I'm going to do some valuation work on Broadcom and take a look at this one. I still think it's cheaper than AMD, right? Even after AMD's fall? Yeah, still cheaper than AMD by a lot, at least on a PE basis. Granted, I kind of like AMD's CPU narrative more than I like Broadcom's ASIC narrative. And AMD, even though the valuation is up there on AMD, I mean, it's 760 billion. Broadcom's at 1.7 trillion. So to be honest, I mean, I wonder if even though Broadcom's cheaper, if AMD's the better buy, just on narrative alone, and then obviously raw market capitalization that's out there. Cerebras, that one to me is becoming a little bit of a meme stock. I'm sorry. I think it is. Might be a good buy. Might end up going back to 300, but it's trading at 105 times sales. They have one big customer called OpenAI. Incredible business, like worthwhile competitor when it comes to inference. But they got 2 upgrades from JP Morgan on Monday, and now the stock goes from 190 to 250. I mean, honestly, I think if people are just trying to get exposure outside of the other AI plays, and they're like, what hasn't run? Like, oh, Cerebras. And they're buying out Cerebras, which feels a little memey because valuation-wise, I don't know how you justify it. But, I mean, you know, if inference is the future and they have something differentiated in inference, maybe that's enough to get the market to be excited about it. Cash flows? Cash flows on Cerebras? Talking about cash flows? You can barely talk about profits. You're talking about cash flows? Texas Roadhouse, that goes green. Intel 109. Is Hood losing some steam? Hood's still holding 90. Still holding 90. Will you be watching Oracle this weekend? Yes. Or today? Yes. Or me, Jose, Tanner, and Neil will be looking at Oracle. Dell was at 490. Dell is now at 390. So you got a little bit of a bump right here, but obviously taking a pretty big hit from where it was closer to the top. TSM's May revenue was good, but it wasn't. Yeah, May revenue was up 30%. The problem is the past few months they were putting up 46% growth. That's why I think TSM took a hit. The growth is still amazing. It's just that month-over-month growth declined from like 45 to 30. So, I think that's why the initial reaction was red in the pre-market. I mean, TSM was holding 435. Now it's at 418. But all the large cap semiconductor names taking the broader hit. Clover's up 13%. Dude, this is the initial or the original meme stock. This is a Chamath SPAC. I know healthcare is getting a little bit more in favor, but Clover Health, This was, what was it, IPOD or something from Chamath? Is it up a lot this year, Clover? Clover year to date is up 100%. Oh my gosh. Well, there you go. It might not be a meme stock anymore. I haven't looked at their fundamentals, to be fair. But initially, what is it down all time? All time, it is down 52%. It got up to about $15 back in 2021. Broadcom 374. I was having a conversation with someone yesterday. They said something really interesting. They said 2026 version of the SPACs is all of these closed-end venture funds that are promising retail democratizing access to like Anthropic and SpaceX and Figure and all these companies, but by doing it in the most, egregious of ways. Crazy expense ratios, massive premiums to NAV, constant dilution, like your VCX, all those funds, they are the SPACs of 2026. Now, the difference is the SPACs of 2021 legitimately were horrible companies. And, like 2 of them survived. The companies inside of these closed-end venture funds are really good companies, SpaceX, OpenAI, et cetera. It's just the premium that people are paying to get exposure to them is kind of ridiculous when you think about it. At some point, people were paying $8 trillion to buy Anthropic when VCX was $600 a share, $580 a share. And so does it blow up the same way as 2021? Maybe not, because those companies are legit, but nonetheless, you can tell that level of exuberance and excitement continues to be there. AMD down 1.5. That one also getting hit as well. Karp is not live yet. I think he'll be live in a couple minutes. Once he is, I will pull up to him. He is not live yet. NVIDIA still not giving us some love. What did people buy yesterday? Put in the chat. What did you buy yesterday? If you did buy anything. I did not buy anything yesterday because I kind of was asleep the whole day. I was thinking of Microsoft, but didn't end up pulling the trigger on it. I think I saw Microsoft at like $399. It's at $404, so nothing too crazy. Palantir, ServiceNow, Zeta, APLD, AppLoving, Nebius. A lot of Cornings here, a lot of CoreWeaves as well. I know Steve told me he bought some SoFi spreads, which he's already up on. So Steve did end up buying those SoFi dip. Bloom. Okay, so what I'm seeing is there were a lot of dip buyers, which once again is basically what happened on Friday. People bought the dip. I do wonder if this is one of those situations where you kind of take some time and let the street play it out and then see if there is a much bigger dip coming. The reason for that is because, again, we've had 2 of these sessions now at this point, basically back-to-back. Historic volatility back-to-back to the downside. That makes you wonder, is there something underlying the surface that'll make it seem like everything's okay when people buy the dip and it goes up? But in reality, it's not okay, and we have a lot more pain coming. No one obviously knows, and you have to use your own judgment and kind of buy the names that you like at prices you think are reasonable to pay. But I think that looming question of like, hey, Are we really about to see a 5% drawdown on the S&P? Because then all these prices will get a lot more attractive. NVIDIA below 205 is unbelievable. But I don't think retail's waiting for that, dude. I think retail's just saying, you know what, you give us a stupid price, then we're willing to buy it, even if it could get worse. Obviously, someone was selling yesterday for us to get that type of red that we saw. Hood still holding 90 right there. Qualcomm, is that still above 200? That is, wow, below 200. Even after the Jensen endorsement, market doesn't care. Mitt, do you think it'll be like this until SpaceX IPO, then next week we normalize? So my take is that, look, if normalizing means we just keep going up and up and up every day, I don't think we get there as easily as people think. Maybe we do, if that's the new normal. But if we're being honest with ourselves, that's not normal. Like what we saw in the month of May was not normal. It just wasn't. Like I say that's right. It felt amazing, right? Because a lot of stocks went up outside the Max 7s and software names, but it wasn't normal. I kind of think the drawdowns we've had over the past 2 days are the normalization that we need, even though it results in NVIDIA and Meta and Microsoft trading at these stupid valuations. But that is more normalizing than what we experienced all throughout May. Now, I just hope that normalization doesn't lead to like 10, 15% down, because that would be actually painful. But 3% down from the highs, I mean, as painful as it is because it happens all at once, it is not abnormal, I guess I would say. Yeah, May wasn't healthy for the market, even if, you know, you're levered up in a lot of those names and they've done very well. So, and the earnings growth was there, but even with the earnings growth, some of those stocks just like went off the charts. And I think the market's just saying, all right, chill out a little bit. AMD at 550 was crazy. At 470, it's a bit more reasonable. And it's providing people an opportunity, you know, to get more exposure here. Now, if AMD goes back to like 300, I would say that's stupid. And that's weird given the type of growth. But that would happen on a broader market drawdown. And I don't know if we get there. So to answer your question, look, do we just keep going up and to the right? I think we need a bit more of a flush out for that to happen. And technically we've had it already 2 times. Maybe we need a little bit more to get it all out of our system. But if we don't, then yeah, maybe we do normalize if the new normal is, you know, not having these violent moves to the downside. I think the reason they're so violent is because the market, it's like the market is sick and it just needs to vomit, you know? And when you need to vomit, it happens all at once. Which is honestly, if anyone remembers 2022, way better, way freaking better than I'd rather vomit than have an entire year of like, we go up, we go down, we go up, we go down, we go up. I'd rather take the elevator down versus the stair steps down, because like, just get it over with, rip off the Band-Aid and let's move on, versus have those swings every other day, which is what we saw in 2022. So, you know, I'd rather have it in all at once. The Jensen video was not AI. What are you guys saying? The Jensen video was a real keynote from Taipei. It absolutely was not AI. It was an hour-long keynote. So no, that quote around Qualcomm, that was a real quote. That was a whole financial analyst Q&A. It's just Qualcomm sucks, I guess. It's like, if Jensen's telling you to buy the stock and no one's buying it, there's a different issue with Qualcomm. But no, that was not AI. You can look it up on YouTube. It's a full hour-long video. And it's real. It just didn't work. Okay, Carp's not on yet. I think he's about to be on in a second. Let's get an update on the Iran thing. They're talking about that. And then we'll keep going from there. Microsoft trying to break through that 405 level right now.
Iran is all talk and no action. The bully of the Middle East is dead. They've taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price. Now, it's not clear what exactly the president intends to do militarily, but his post does suggest that continued military confrontation with Iran is likely today. And we've seen this flurry of strikes over the past 24 hours, with CENTCOM saying it completed what it called self-defense strikes against Iranian air defense, ground control stations, and surveillance radar sites near the Strait of Hormuz. The U.S. called its operation a proportional response to Iranian action, including the downing of a U.S. helicopter yesterday. Now, we also saw Iran say last night it had launched strikes in response to that, targeting a U.S. military facility in Jordan. And Kuwait said last night its air defenses were firing after Iran said it would target that country, guys. So we see this flurry continuing, and it may continue through the day. Back over to you.
Eamon, the thinking is that the midterms are approaching. The House is increasingly opposed to the war, obviously, with that resolution. The munitions and stockpile supply is dwindling. Energy inventories are a concern, and that it's hard to imagine the administration having the wherewithal to start a hot war again.
Yeah, and you're at this point now, Carl, where you've got these questions of pain thresholds, right? Do the Iranians have a higher pain threshold than the United States, or does the United States have the higher pain threshold here? You've got this situation where both countries have decided, we're in this stalemate. We're going to call it a ceasefire. We're going to try to negotiate our way out of this. But in history, generally, you don't see many examples where somebody's been able to negotiate something at the negotiating table that they weren't able to win on the battlefield. And so it's going to require one side or the other making concessions here. And what we've seen psychologically and politically is that neither side has been willing to make those concessions, or at least enough concessions to get a deal over the finish line. And that's sort of where we are. And that's why you see this back and forth military action, because it's easier to do that than it is to make the concessions that are going to get to the deal, at least for now. The question is, how long can that persist?
I keep thinking about what you said, Eamon, in the very early days of the conflict, and that was that it does take two to tango. You can't just say the war's over without hearing from Iran, but increasingly now from Israel. What if the deal did come together in which they got some uranium or some labs and maybe a small payout? Is that something that Netanyahu would go along with?
Well, it's an open question, right, Carl? And you've seen this relationship between Netanyahu and Trump really strained in the past couple of weeks as Trump reportedly called him, screamed at him. Then you saw both sides, including Netanyahu on our air with Sarah, saying, well, no, that's been patched over. We're good now. But there has been some visible fraying of that relationship. And you wonder if the president of the United States is more willing to cut a deal than Netanyahu is. Where does that leave Israel in all of this? And that is just an open question. And you've got sort of this triangular shaped war where at least two of the three parties are looking for an immediate off ramp, it would seem. And the question is, how do you go forward in that scenario?
Eamon, stay close.
Let's do a poll. I don't think we've done this poll in a minute. Let's do a poll right here on when people think this war will come to an end. So 60% of you said we'd be red for the day. When does the war end? Let's do in a month, in 2 months, in 3 months, not until 2027. I still think that July 4th theory of having the war over before America 250 is something the president kind of cares about. I mean, he has talked about it before. There's been sources to the White House that have talked about it. Robinhood still holding that high 90, but obviously it's not really officially taking place yet. Yeah, Carp is not live yet, guys. As soon as he goes live, I will be there, but he is not yet live. Cerebrus still up 8, Dell up 4, Microsoft goes red again, Nvidia 205.78 again, not getting the breakout. It'll end in 2035. Oh my gosh, dude. It's kind of crazy. Trump's entire second term has officially been filled up with tariffs and a war. And I don't know, man. I don't know when this thing is going to end, but that's been the majority of the second term so far. It's also been a good stock market, right? So he can still say your 401ks are doing well. It's just that day-to-day living. Dude, when people talk about rent increases, I got the renewal lease for my apartment yesterday. 10% increase on my rent. And I'm looking at that shit like, I already pay a pretty decent amount. 10%? But like, I can't negotiate with that. There's nothing to negotiate for. And so it's like rent's not coming down. I don't know who says rent is coming down. Rent's not coming down. I'm like 10%, bro. In a like, is that what it is? Is it supposed to go up 10% every year? Is that normal for rent? Like, is that a thing? I mean, this is my first year renting. The only other time I rented was in college, and that was, you know, like $500 a month for a single bedroom. But I couldn't believe it, bro. I'm looking at this shit like, this is, guys, like 10 freaking percent. Did the apartment get 10% better? Like, yes, that's normal. 10% is normal. Dude. I mean, they like changed something in the elevator where they now have an LED screen to show you all the events coming up instead of like manually changing it with different flyers. I was like, oh, that's cool. There's an LED screen in the elevator, but is that worth 10% more a month? Chad says I would raise your rent 10%. Chad, I would be too good at negotiating with you. I know you close all these multi-$100 million deals or whatever, but I would find a way to make you only raise my rent by 9.9%. As long as I get a little win, that's all that matters. I can't even negotiate with them, though. I can't even negotiate. Like, I'm Indian. I love negotiating. Like, we live to negotiate. And I can't even, I remember the first time I tried to negotiate when I saw this place back in August of last year. She told me the price, and I was like, okay, so what, could you guys do this? And she just looked at me, the realtor. She was like, honey, if you don't want it, just let us know. Like, I was just like, okay, yeah. I mean, they have plenty of people that'd be willing to take it. There's no negotiation. You can't do anything. You have to just freaking pay it. Amazon right there, $241. But yeah, it sucks, dude. And I'm like, are they doing it because of inflation? Or are they doing it because they have the leverage? Like, but if you guys are saying it's normal for it to go up 10% every year, well, I guess they're keeping up with the cost of living then. Respond with CPI is only 4.2%. I should do that. I should write in the emails like, well, CPI is only 4%. So theoretically, this extra 6% arbitrage you guys are getting, it's kind of crazy. Some of you guys think it's not normal. Some of you saying it's normal. No, I get it. Look, I know it's New York. I know it's going to be a little bit more pricey, but 10% is crazy, bro. It's freaking crazy. Okay, Trump's going to be live in a bit as well. Carp is, I think, going to be live literally in a minute. Trump is live because he's signing some act. So we don't have to watch him sign the act, but I do want to get him on Q&A, which probably will take 30 minutes to get to. 227 on Nabesis. That's green. And that's up. Bsoft says it's not NY, you're Jersey City. We don't accept you Jersey people. Dude, most of the people that work in New York live in Jersey City, okay? So the idea that you don't accept Jersey City residents is ludicrous, all right? You guys can't afford to live in New York, so you go to Jersey City. Although, dude, I saw an article yesterday. Jersey City is more expensive than living in New York. I couldn't believe it. But then they broke down the numbers. I was like, holy crap, Jersey City is more expensive than living in New York City. Now, I think if you live in like the core parts of New York City, like it's probably not, but on average it was. And I was like, that's crazy. But nonetheless, we're all New Yorkers in our heart. Okay, they have an update right here. Not live yet. But let's see this update. We should be getting Carp pretty soon.
Investigation. Let's get to Emily Wilkins on the Hill with some details. Emily.
Hey, Mike. Well, lawmakers have just begun their questioning of Bill Gates for his ties to Jeffrey Epstein. Gates did come in this morning and give a brief statement noting that he was here voluntarily talking to lawmakers and adding that he hopes his testimony is helpful for the important work of the committee to find justice for the victims. Now, Gates has said that he did not know about any criminal wrongdoing by Epstein. He said he never visited the island. But one thing we know that lawmakers are going to ask about, Chair James Comer told reporters that he wants to ask Bill Gates about this email that Epstein sent apparently to himself that mentioned Bill Gates as well as getting him some drugs and some medication, as well as his relationship with some woman outside of his then marriage. And of course, we're going to be expecting to hear more from lawmakers as this testimony goes on about Gates. He's certainly one of many, many people that has been interviewed by the committee over Jeffrey Epstein. And we're waiting to see exactly what the outcome is going to be from this report and from these series of interviews that are being done, and whether that could have more implications for the reputation of Gates, the reputation of others, and then ultimately what, if anything, more is going to be done about Jeffrey Epstein and what he's done. Guys?
Emily, thanks for that. Emily Wilkins on the Hill today watching Gates and House Oversight. After the break, an exclusive with Palantir's co-founder and CEO Alex Karp. We'll get his thoughts on this tech volatility, the Iran war.
All right, we'll get Karp soon. I don't know if this testimony on Bill Gates is going to lead to anything serious, but, you know, I guess time will tell. I think he's trying to do the testimony to act like he has nothing to hide. It's just, obviously, there's going to be a lot of different questions there. But we'll probably get some more updates from that later throughout the day. Amazon right there, 242. Broadcom 376 getting a little bit of a rebound. Robinhood loses 90, 89.75. Dell at 394. S&P is holding on to a little bit of green, or at least green candles. Hasn't flipped green on the day. We were at 737.59, now at 736, which I would say is a pretty big win given pre-market. We were at 730. Rocket Lab has turned red. Honestly, if we get a day like today, which is flattish to red to a little green, that's way better than yesterday's just cascading waterfall down. By now, this time yesterday, we were already like falling off a cliff. So the fact that we're not doing that today is at least a little bit more encouraging. SanDisk, that's up 4%. 4% as well. TE got hit pretty hard. This thing was pushing $12 the other day. It's 7 yesterday. Now it's at 8.15, still down 3.7%. A lot of these smaller speculative names definitely taking a bigger beating, but it's not like if you're in the large caps, you can feel comfortable because they're taking a beating too. So, and then when everything runs, the large caps barely run and the small speculative names go to the moon, which is why I think this market's been so freaking frustrating for so many people this year, because the safe names don't run, but they do go down when, you know, when everything goes down. You don't see the rotation from the small speculative stuff into the safe stuff. You see the buying of the dip of the small speculative stuff, to be honest, because that's where the alpha is. NVIDIA right there, 205.40. As that one continues to go red. Again, we'll go to Trump when we get to Q&A. Right now, he's just sitting and signing stuff, so there's not much we're going to get from that. Whereas Lutnick? Lutnick was actually at the Knicks game. I don't think they're going to be at the new Game 4 tonight, but Trump and Lutnick were both at it for Game 3. But, yeah, we haven't heard from Lutnick on TV in a while. What do people think of the Apple event? We didn't get to talk about that too much. Apple 290 down from 317. I thought the announcements they made were good. I don't think they were, oh my goodness, like you have to own Apple stock type of good, especially not at 33 times earnings, which is like, dude, NVIDIA can barely get 15 and Apple's not putting up NVIDIA growth. But I also think they failed to get people super excited for what an AI future looks like, especially because we don't even know when it's going to be rolling out. And so it was stuff that Gemini and the Google Pixel already has. So it was good that Apple has it now, but it wasn't something so monumentally different. Like they didn't bring agents in a way to consumer devices that are, you know, you could trust it to book you a flight. Like we're not at that level yet. And it's like, I think when we get to that level, it's going to be really exciting, but you know, I don't think Apple's fully there. Their new beta is better than the latest release, which should say something. Yeah. Which is, you know, it's been the story with Apple for a while now. And hopefully we see when this beta comes out, but as of now, no one even knows if it's going to be live by October. It probably will go live on the newest model of hardware they come out with, but you know, we also don't know what that newest model of hardware will look like. All right, Karp, he is live. Let me go to him. And here we go.
Which has a multi-billion-dollar contract with the Army. Our Sarah Eisen joins us this morning with Palantir's co-founder and CEO, Alex Karp. Morning, Sarah.
Good morning, Carl. It's good to see you. Yes, I am here at Palantir with the founder and CEO, Alex Karp. It's good to have you. Good to speak with you.
Very nice to be here.
And Carl was just talking about the Iran war risk, which is influencing the market today, and the fact that we haven't gotten a deal yet. I know that you are heavily involved, AI operating system for the military. What is your view on where the war goes from here?
Well, first of all, at Palantir, people currently are focusing a lot on our commercial business, and there's a lot of interesting things there. But once war zones heat up anywhere in the allied world, the Palantir Maven platform, which takes very valuable LLMs and makes them actually lethal and useful on the battlefield, come into action. And then the primary focus of our whole company is bringing our American warfighters home safely, meaning that when we engage, that they engage in a way that it gives them a massively unfair advantage, scares our adversaries, and make sure that when they're in action, they have the best humanly and inhumanly possible chances of coming home safe and without injury. And so the whole company really just focuses on the operations of that. And obviously, these things begin well before the public sees. And we have a wide swath of Palantirians working on various platforms, particularly the Maven platform. And then there are a lot of things that are in the public space. So Maven has been kind of discussed, and kind of older versions of Maven have been shown in public. But I think the American people would be very positively surprised by the advances in technology that really only America has.
Without giving away too many secrets, like, can you just explain what edge that is that you give our warfighters?
First of all, there are really two things. Every military force in the world, so you see this on the battlefield in Ukraine, like one of the big issues the Russians had is how do you transform your operations into a modern operation? And if you take components of Maven, there's basically infrastructure, which allows you to take older systems and make them newer systems. And then, so that allows you to have a completely integrated battle space, which is super hard because of security, clearance, data sources. You can think of it as infant data with some of which is very sensitive, some of which no one else can see, some of which everyone has to see, with allies working on it. How do you get that into one pane of glass with the security? How do you then use advances in AI and machine learning to enhance that while making those decisions not like what's proverbially called loose AI code that's just not useful? Like none of these things actually are used anywhere on the battlefield. So how do you enhance your ability to see things? How do you enhance your ability to go through very complex systems? So like, for example, in Ukraine, it's not just getting the drone to the end point, it's going through advanced radar systems. And then vis-a-vis Iran, it's 100 times more complicated because they have, it's like you look at American performance, which has been, thanks to the bravery of Americans and the ingenuity, and I would like to believe our tech, very few losses on our side, very precise, very controlled, and then in a complete ability, you saw this in Venezuela, to dismantle these things. And so because the dismantling is happening, we underestimate the complexity that it took to do that. It was not possible to do these things 2 years ago, 3 years ago. And now America can really do this with great precision and with very low cost to us in terms of lives and casualties.
Is that opening up new business in different regions for you, the success of what you're seeing in the Middle East?
One of the many secrets of Palantir, people talk about our forward deployed engineers they're trying to copy, talk about ontology they try to copy,
I was going to get there.
talk about how software, it's like, fine, software's worthless, but everyone's trying to copy us. So that's obviously, and some points of software are not that valuable, but some parts are crucial.
Is.
Well, there are three kinds of software, really. There's basically, you can think of infrastructure, which is like hard-coded things written into the enterprise that have to be managed on-prem often, so you maintain the sovereignty of your own data. That is not valuable. That is excruciatingly valuable. Then you have, how do you manage that? So like ontology, Foundry, and other things. Those things are very valuable and durable. Then you have FDEs and large language models. Most FDEs are just throwing people at a problem that anyone else can solve. So if you can manage, so some are valuable, some are worthless. Free code is essentially very easy. So you have very different, but in any case, what you see in crucial situations in Russia, in the Middle East, or in Ukraine, Middle East, where you have to bring home people safely and where your adversary has to be dismantled. And then adversary the Persians and the Russians and the CCP are exceedingly talented technical people in various different ways with very unique and historically viable ways of fighting. So you're not going up against an adversary that's just going to lay down. When you have to do that, you have to bring your unique way of doing something enhanced with things no one else has. Those things now are infrastructure, software, Foundry, Apollo, and large language models that we are producing managed by us. It is the combination that is legal. By the way, you see this in US commercial. And the interesting thing about what's going on in the world right now, so domestically, is you have essentially a really important, uniquely American movement, call it Frontier Labs. The way we think about this actually is just philosophically and technically wrong. Philosophically, it's wrong because it's not doomer versus not doomer. It's a hyper religion of hyper optimism. They believe all problems, present, past, and future, including the ones they create and don't acknowledge they create, are going to be solved by them, including human nature, disparities in, and then on the infrastructure side, enterprises are just fed up because they know this doesn't actually work this way and it's not working. And that basically drives our commercial business. On the government side, we are super pro-American, super pro-West.
You've always said that.
Yeah.
And you've always done that. I do wonder, though, how you protect the company from getting politicized. I mean, you've worked with administrations in both parties before, but especially, when it comes to this war, which is unpopular and the Democrats have been fighting it, how you avoid making Palantir a target in the midterm elections or in the next presidential election.
I don't want to be positively overly naive. I am trying, sometimes with success, sometimes without, to move people. The AI infrastructure revolution is a unique opportunity for America because we've developed almost all of it first. However, it cannot be discussed in blue-red terms. Like currently, the biggest danger to America is, it's like people are like, oh, this guy agrees with me politically, therefore he's right. This woman disagrees with me politically. There, like this is a massive, massive revolution. And there is a danger. Look, I've been running around telling people for the last 6 months in private and somewhat in public.
The nationalization.
The nationalization is coming.
Yeah.
And the reason why it's coming is you can't do a blue-red debate. This is a massive revolution. And it's going to, there's opportunities only America has. And there are dangers in this revolution. And for example, I got in trouble for not saying we would have a draft. I wasn't saying that. I was saying we're in a.
Some people think you were advocating the draft.
Well, what I was saying is we're in a massive time of dislocation. And in dislocation, we have to find ways to come together as a culture. And while it is the case in Silicon Valley that everyone thinks we're going to magically like each other because there's abundance and no one has a job, unless we're ending history, in fact, it's actually very much the opposite. We're going to have massive resources, but they're going to disproportionately go to people who are already wealthy. Okay, that is a political problem. Yeah. You can't just say, oh, we're all going to have more, therefore we're happy. Okay, well, we're not at the end.
So what should the industry do about it?
We have to be frontal about there are issues that are real and getting worse. Like wealth accumulation is totally fine, even though I am actually a card-carrying progressive. I don't think card-carrying progressives have anything against it.
You're still a card-carrying progressive?
I know. The question is not whether I'm progressive. The question is whether some progressives are progressive. I am progressive. I want poor people to have better lifestyle, higher standard of living, all poor people. I got in trouble for mentioning that, 37% of our GDP is female. 50% of Americans, 52 roughly, are female. There's a dislocation there. 67% of people who have gone into graduate school are female. These parts of the market are going to be put under massive pressure. It doesn't help to pretend we're not going to have these problems. In fact, the progressive position is progressive because you speak about problems like, okay, so we can protect our workforce. Can we protect our workforce and have migration the way we used to? Can we protect our workforce by teaching people the same skills we used to in the past? We have a massive program at Palantir to help neurodivergence, not because I'm particularly a good person on that score. I mean, I am dyslexic, and some people think I'm neurodivergent, but because those people are particularly valuable for our economy. And what made someone come to America from all over the world? They were neurodivergent. They're like, it's not working out for me in my culture. I got to come. So
Okay, I'm glad to hear that.
but in any case, yes. But the point is, we have to somehow get everybody around, people who totally get, it's like when Bernie Sanders says, I'm going to take 50%. Okay, you know
you
what?
think that's actually going to happen?
I'll give you, if we keep going, Bernie Sanders, you know how people don't think I'm progressive? In 2 years, they're not going to think Bernie Sanders is progressive. They're going to be like, Bernie Sanders, you only want 50%? What is this 50%?
That's where you think we're headed as a country?
We're absolutely headed in that direction. And we're headed in that direction simply because the most important, leaving the tech aside, which is also driving it, the most important political decisions in this country are going to be driven by, do you understand AI? Do you understand what it's doing? And as importantly, are we going to tell the American people, don't believe your lying eyes? Like politicians in the past have done this. It does not work. The American people are really wondering what is going to happen to them. And the answers aren't all good or bad. And then they can't also—
Do you see mass job losses?
It's not the job loss, the thing that is mass needing to retrain and retool and do things differently. By the way, this is an incredibly important American advantage, as I spent half my life in Europe. If you just said, what are the advantages they have? What are the advantages we have? The biggest advantage we have is our dynamism, our ability to change, our ability to rebuild. But we're going to have to use that advantage because the jobs of the past are going to be very different than the jobs of the future. And we're all going to have to change. And that's going to disproportionately affect people. And then we need a common purpose. What is our common purpose? And that's something that we're really struggling with. And when you have these struggles, people go to the far right and the far left, and they're very charismatic. We should not make the mistake Europe has made by not addressing these things. And then the only people who win politically are people who may not know what they're talking about, but are very charismatic because they're addressing a real issue. And in this case, the real issue is Americans are afraid. And by the way, the other real issue, and I'll just talk about somebody, I've spent 20 years in enterprise. We work with the most important governments. We are controversial, quite frankly, because we power every single Western power that's at war.
Yeah.
And by the way,
You're proud of that.
You know why we're also controversial? They have capacities they didn't have in the past, and our adversaries hate that.
I know, you continue to make that point.
But the commercial enterprises are also unhappy. You know, it's not just the man and woman on the street that is unhappy with the Frontier Labs. It's in private, every single enterprise we deal with. And we have this thing inside Palantir, it's somewhat controversial, but we keep debating, should we pay people to go to large language model companies before they come to us? Because people come out of there screaming, saying, this could never work for me. They don't understand the enterprise. They don't care about my enterprise. They want a token max.
Okay, so you're getting to the heart of it, because I think the biggest question around Palantir right now on Wall Street is whether the large language models, the Anthropics and the AIs, which are about to go public, can replicate what you're doing.
You know what? It's a real question that no one in enterprise factually is worried. Like, you know, investors are really intrigued. Short term have no idea what they're talking about. Long term end up being right. But we will just debate this with the facts. You know, I've spent all my life, for better or worse, dealing with the most complicated, most interesting enterprises. I'm on the ground floor of that, probably like no one else.
And they don't, you're saying?
I mean, most of them are chillaxing over their latte, reading a report about something that they don't understand the technical capacity about.
But they're hiring the kind of engineers that you have.
And those kind of engineers are great engineers. And I'm telling you, they don't talk to the enterprises or don't understand the technical challenge. And also, by the way, the ability to be a great investor in the kind of that's where large language models are more useful, because it's probabilistic and you don't have to get better than really 51%. If you want to manufacture a car and you need a part, or you want to send a rocket to the moon, or you want to put a missile on your adversary's head and bring home Americans safely, that stuff doesn't ship. And by the way, and there's not a single high-end enterprise like that would ever put, by the way, that's before you get to the cultural impasse. Like when you go to San Francisco and talk to them, their basic vibe is, we don't have to solve your problem today, because tomorrow you're going to go away and all of your problems are going to be solved. It's largely religious. And Then you get to we're gonna replicate Palantir by doing a deploy co. I mean, it's a complete farce. Like the people who go there to solve the simplest, easiest problems that sell tokens. And the part they don't understand, honestly, and I told them this, I probably shouldn't, is they don't understand how unlikable they are. So the product doesn't actually work the way. It's very expensive, and you got to overcome the fact that you may not realize outside of Sam. Like, actually, I'm not even saying I find them unlikable, because actually some of the best and most interesting conversations I've had in business are like hanging out with some Sam, Dario, others. I mean, these are high, like you talk to Dario, it's a great time. And he does.
We were together at AIG.
Yeah,
I was going to ask, is Anthropic, are they friend or foe? Are they competitor or partner?
Again, I mean, most of the things they talk about in public are running on Palantir. So it's like, now, at this scale, we're a nation state, basically. They are like, we are, he is the frontier person of the leading frontier model company currently. And he's gone from being way behind to being ahead. And he's a very, very important person. And I'll tell you, he believes what he's saying. I just would say that, put this way, he believes all problems I think, and I impute him, or believes all problems of the current, present, and future, are transitionary to a perfect future. I believe that we need heaven on earth, not heaven in 20 years. And we disagree on these things, but doesn't mean that, it's like we don't agree on other things. It's like, they agree on certain national security. We disagree. It's not as simple as agree, disagree, bad, good. These are some of the more interesting, important people in the world. I'm betting heavily, and my customers pretty much are on my side, that, it is not that large language models aren't crucial for the world. It's just the implementation is where the value is, certainly in the next 7 years. And if you want to ask me what's going to happen in 10 years, I don't know. But, the risk of a pathogen destroying us is probably as high as...
Is that why you guys are working so much on healthcare right now?
Well, the thing is, these low probability events that shape the world are often underestimated. And they are, again, these are not like, these are events that require software infrastructure, implementation, ontology, and large language models. As an example, if you have a deadly pathogen come into this country, the signs of this are going to be very similar to the signs of finding somebody moved a truck by 2 centimeters, and that means they're going to attack. Is only possible. And then the security around it, which people often underestimate that we do, which is the bedrock of the reason why Palantir is indispensable. It's like, you can't just use data sets in this environment. Each single data set, you can think of as each single micro part of the data set has to be its own sovereign data set. So this whole move you get of what part of the data is sovereign, you can think of it, we do that at the millimeter level. Like, which part of the attribute is sovereign to the person? What can be shared? What can be imputed? What can't be imputed? What can't be generalized and shared? What has to be shared? Which experts can see what under what conditions? Is the measurement accurate? How long is the measurement accurate? Under what conditions is it accurate? Who does the implementation? Do they have the clearance? All these things,
That's what you're working on.
all those things have to be modeled and done in a platform that's been doing this. By the way, the cyber threat, like, you can't just run large language models. How do you patch what you find? How do you patch what you find at scale? Is the software
That's
you
what
run?
the CrowdStrike and Palo Altos are saying.
How do you, and if you could do all that, how do you have the accreditation to work on a secure network if you've never actually done that before? You have no idea what's involved, and you need the accreditation to do it.
So they're not a cure-all. But finally, Alex, I did want to ask you about SpaceX, because it's going public this week as well. And I know you've partnered with them on proposals like the Golden Dome missile protection, and you are working on AI operating, I think, as it relates to space. So I'm just curious how you view that area.
I'm very optimistic for the future. I root for every entrepreneur. I'm rooting for Elon. And we partner in some areas and probably don't compete in others. But it's, look, when a massive IPO, first of all, we're so blessed in this country. Like, okay, so, I mean, I spent half my life in Germany. If there was an IPO, DPO, or anything at like the $120 billion range, the whole country would be jumping up and down. Here we have a country where it's like, appears to be one of the largest, if not the largest IPO ever. It's super cool technology, things that no one else have done. And like, I think most Americans, and certainly I hope all entrepreneurs, are rooting for success.
And space, bullish on, are you bullish on space? Are you guys doing stuff there?
Well, again, it's very similar to these other debates. People underestimate, it's like bullish on space if the person doing it knows what they're doing. Bullish on Elon in space, yes. Bullish on space, no idea.
Okay. Alex Karp, thank you very much.
Thank
it was
you.
Really, always good to talk to you.
Yeah, you're
I
in
think we
great
covered a lot.
demand.
Thank you.
Great demand.
Alex
Great
Karp,
demand. Glad I
CEO
got
and
on here.
founder,
Bye. Bye.
Of Palantir, really defending the company, Carl, against, I think, some of the narratives that we talk about and hear about on Wall Street, especially when it comes to the AI software, where there's been this rotation out of it and names like Palantir into the infrastructure plays and potentially the LLMs here.
Great stuff, Sarah. Thank you. That's our Sarah.
All right. That was Mr. Alex Karp. I think kind of the core point that he got across, Palantir flipping green on the day. By the way, SPY, recovery to the green, baby. We were at 730, 750 right here. I think the biggest part of that was when he was talking about Palantir versus Anthropic. And I think the kind of takeaway from that is, once again, and this is when I was at AIPCon, you know, the moment Karp made everyone laugh is when he said, our greatest sales tactic is letting you guys, AKA customers, go and take the sales call with an OpenAI or an Anthropic and realize they don't care about you. And I think it kind of makes sense. Anthropic and OpenAI want to sell tokens, and they need to justify these massive valuations to Wall Street and continue to raise capital. They do not have the time to spend 9 months like Palantir did with Tampa General Hospital to be able to solve meaningful issues inside of the hospital, get to know their business, have FDEs that have a cultural fit, and then be able to deliver outcomes when you're busy worried about selling tokens. And so I think his argument here is like, could Anthropic theoretically try to replace Palantir? I mean, sure, theoretically they could try to do that, but the level of cultural fit, the level of implementation, the actual years of dedication towards developing an ontology that makes sense of the large language models to deliver outcomes versus to deliver increased token usage, that is the difference. Not to mention all the different technical elements of why Palantir software is working and delivering the results that they're delivering. And, you know, investors don't really believe that argument yet. Otherwise, the stock will not be down as much as it is on the year, but similar to a variety of the software names that have been taking a pretty big beating this year, investors still believe that Anthropic, OpenAI will disintermediate all the different SaaS platforms. And I think, you know, I like when Karp said, we'll just let the numbers tell the story. Eventually, if that doesn't happen and the company keeps growing, then it's going to be hard to easily make that argument. By the way, speaking of software, ServiceNow got a nasty headline right here. ServiceNow appears to have notified some of its enterprise customers that a software bug on its platform was allowing anyone on the internet to access their data, as per TechCrunch. I'm sure we'll get a comment from ServiceNow later throughout the day, and we'll see if that's accurate. But not the best thing to see right there on ServiceNow. Stock's not really affected too much, still green on the day. And we don't know how many enterprise customers were affected by that. But still not one of the best headlines to see. ServiceNow right there, 108.42. As that continues to be somewhat green. Webull, that's up today with Robinhood. You're seeing a lot of those brokerages get a bid. Webull right there up 13%. SPY goes red again, but it's basically stuck in that 735 to 737 range. Nvidia still down on the day. Microsoft still down on the day as well. Broadcom and TSM still down also, even though they're not down as much as they were in the morning. All right, so it's a bit of a divergence. CoreWeave, Nebius, Iren, Oscar, Tempest, UNH, Bank of America, financials, those are green. Some of your software names are green. Some of your fintechs, like a Hoodie, is green. And then a lot of your large caps. I mean, is there any large cap that's green today? All the Mag 7s are red, except Google. It's up by 5 pennies. Now it's red. Okay, so all the Mag 7s are red. Broadcom's down. Tesla's whacked. Wow, hold on, 386. Is that lower than yesterday? Yesterday was 384. Interesting. So Tesla very close to yesterday lows, even though the market is absolutely not anywhere near yesterday's lows. Is Oracle a large cap? I mean, technically it is, right? Oh yeah, Oracle. 600 billion. I forget how big Oracle is. Yeah, okay, so Oracle's green. UNH is It was green, 415, now down to 408. So UNH ended up going red. Broadcom still red. Why did Credo pump today? It got hit on earnings. Is this just the optical tailwind again? Credo right there. Yes, we'll be streaming Oracle tonight. I don't see any headline on Credo, but Bank of America conference they had. That was June 7th, just a couple of days ago. All your optics names are up though, so that's why that's green. Oracle's going to be interesting. I mean, look, I don't think it's going to go down to the 130s, 160s. I could see it going down to 180s if it's really ugly. If not, 220s is probably the move that it would get back to. It was at 230 a couple of days ago. I would like for this thing to just consolidate, have a good quarter, not have anything too surprising, and kind of hold the 200s. That would make me happy with Oracle. But, time will tell. I do have Oracle, bought at 130, 135, and then I bought more at 160. So average is around that 155, 160 range. I don't think it gets back down there. If it does, then it's there's something really bad that they messed up on. And given all the good earnings we've seen from semis and data centers, demand should still be really strong. I think they've levered up enough debt. I don't think that would be the issue. But we will find out today. Let's see if that gets ugly. Would you be selling covered calls today? Oracle was just at 230. I don't know. Sorry, it was at 250. Wow. June 1st, they got to 250. I didn't even realize they got to 250. I don't know if covered calls. I mean, this thing could be parabolic back up there. Granted, market sentiment has shifted, so maybe 250 calls, 235 calls are not crazy. But if it has a really good quarter, I mean, another 10% on this, you're right back to where you were a couple days ago. So it's not too bad. I bought Oracle at 195. Okay, 195, yeah. I mean, if the implied vol is closer to 10, 15%, then obviously 195 is in reach. But I still think, if it falls back to 180, if it falls back for a dumb reason, just like Broadcom, it probably wouldn't be the worst opportunity here. I also think Oracle's down because of their OpenAI exposure. I mean, again, if SoftBank can't get a margin loan against their OpenAI position, I think SoftBank's one of the biggest financial institutions on the planet. If they can't find a margin loan backed against their OpenAI collateral, maybe the market's feeling a little shaky on OpenAI, which Oracle's heavily levered on OpenAI as well. And that could be part of the reason why it's taking a hit. But I think it'll be a good quarter. NetSuite's growing like crazy. Data center stuff is fine. I don't think we should see that much of a drawdown unless there's something we're just not expecting. HIMS, is that at 30 today? HIMS 2869 could not crack 30. Uber, are we up? No, Uber below 70. Mercado Libre, that's down 1%. Shopify, are we at least at 110? We are at 109. Palantir, trying to hold on to some of that green. All right, so most of the software names still taking a hit. Not sure why Tesla is just going down right here, 386.38. Again, SpaceX IPO, I'll be live all day Friday. I think the IPO will be at like 1 p.m. It's going to be absolutely historic. I think it's going to open at like $200, or at least close to $200. And then I think it'll have a week of staying there. But then after that, I don't know if it can easily hold that valuation. Like imagine the S&P falls 5% in July. There's no way in hell SpaceX is going to hold a $2-3 trillion valuation. And so the question is just going to be, is the macro going to be able to, allow that company to hold that number? 11 million worth of calls have been sold on Tesla today. Wow. All right. So you definitely have some call selling, which is more bearish than not. We got another headline. This is from Israeli Channel 12 News. Israel Air Force has just launched another airstrike in the Bekaa Valley area east of Lebanon. Market's not really reacting to that. Spies, well, actually, no. There's your candles down. 734. We got to 738. There they are. Oil, is that reacting to it? Oil back at 90. Yep, you are seeing some reactions here. Oh boy. Oh boy, oh boy, oh boy. I guess we're going to have to see how Trump reacts to this now. I guess we're going to have to see what Trump says. I mean, he said 2 days ago they would all three stop the missile strikes. And granted, Iran, hit Bahrain last night, so they have not stopped. Do you still have your SpaceX reservation? Yes, but again, I don't think I'm going to get an allocation. If it's 4x oversubscribed, the odds that people on Robinhood actually get an allocation is very slim, in my opinion. So I don't think I'm going to get any shares, but if I do, then I'll hold on to it. But I want to see if I even get it. But also, if I get it at 135 and it goes to 150, it's like there's more risk holding on to it versus if it opens at like 180, 190. It's like, okay, then you can just chill out. But if it barely opens above the price, which if it's 4x oversubscribed, I don't see that happening. Then you could see this thing easily falling back down like Cerebras, in a couple of days. Sweet Green, that is up 11%. I don't see a headline on that, but that is green. Nate, do you think Grab's a good entry price at 330? Yes, obviously, I think it's cheap here. Once again, the problem with this name, Mercado Libre, so many of the international names is this ongoing oil crisis actually hurts them, even though if you look at a lot of their earnings, they've been navigating the crisis very well. But the broader point is just sentiment is on the AI names. And, Mercado Libre, Grab, Nubank, they're all using AI. And it's like their businesses are growing phenomenally. 30% top line revenue growth, 50% adjusted EBITDA growth, net income, they're all profitable. The problem is they're not the picks and shovels of this AI revolution. And they don't catch a bid. NVIDIA losing 205 again, goes red. So once again, my thesis on a lot of those names are you buy them and you don't look at them because they're fundamentally strong companies that are growing. But for alpha, they're not there. But it's not just them. Meta, Microsoft, those also haven't given you any alpha this year. Like, it would be one thing if it's like one segment of the market that's just dead. But it's not. Large caps, internationals, fintech, software. And, they're not legit all dead over the past couple of weeks. They've started to somewhat come back to life. But compared to the semis, they are all minuscule. I mean, look at the companies that are leading the S&P 500 in terms of gains this year. You're not going to see any of the names you saw last year or any of the names that that are like names that people talk about all the time, like a Google, NVIDIA. Like, they're just not there. No one cares about them. It's about the Corning and the Micron and the SanDisk. And I get it, but I think eventually that changes. I think eventually the market's like, wait a second. Mercado Libre is growing 30% for 30 quarters in a row. Grab is growing adjusted EBITDA 50%. They have 40% of their market cap in cash. Microsoft, 40% Azure growth. Meta, 13 times earning. Like, I think the market eventually looks at all these names and says they're super important. We're just not there yet. And maybe we need to have the flush out before we get there. 581 on Meta, potentially going below 580. But until then, I'm not sure if we're seeing it take place. Intel, yeah, as Mick says right there, had Intel for years and then boom. Once the narrative changed on Intel, I mean, you have to hold this thing for the past 5 years through basically nothing, if not just a decline. It peaked at 50 in 2024, 17, 2025, and then boom, there was your move. But obviously, right place, right time, AI beneficiary, and it really tested your patience, which I think in this market, a lot of people don't have patience. And I get it. Why should you have patience when there's stocks going up 10, 15% every other day? But nonetheless, the patience, most of the time is needed on a lot of these fundamental names. I will say, I do think one of the things I've been doing for the past month is I've started trading a lot more. And I took a portion of my account, put it into Tasty Trade, not even part of Robinhood, so I don't have to look at it. S&P now approaching the lows of the day, 734, so we just lost that green candle. And I've been trading with it, and I've been learning how to trade. And it really does take away a lot of the FOMO because you don't have to own Micron to make money off Micron. You can trade it. And it makes you, even if it's a psychological hack, it makes you feel like, oh, I made money off Micron, even if I didn't own Micron. And it reduces the necessity to be like, I have to own I have to get a piece of this Micron action. It's like, you can do that with a trade. You don't need to do that by pledging your allegiance to own Micron at these incredibly massive parabolic moves and then, be scared at night in case Google comes out with some new update on memory algorithms and KV cache and then boom, you're left holding the bag, right? which is the cool part about trading. So it's been more fun. Like yesterday was a short, bro. Yesterday I went short. I went short everything. I went short Hood. I went short Nebius. I went short Marvell. And they printed. I mean, like honestly, the red days, it sucks in the main portfolio, but on the trading portfolio, it's like, oh, short. That's everything's going down. Like it was yesterday was an easy day to trade. You short. Everything's going down. And then you buy back your shares at a lower price and boom, you make money. So a lot of these red days is actually not that hard to benefit off of it from a trading perspective. But obviously, long-term positions get hit. Correct. That is not investing. That is not. It was part of the sell-off, get him. Dude, it was kind of funny because my mom, she really wanted me to go to the doctor. And I woke up and I was like, yeah, I'm not feeling the best. And she was like, all right, go to the doctor. And I was like, all right, I'm going to go to the doctor. And then, I didn't want to go to the doctor at freaking 9 a.m. Like, I was like, yo, I'll go to the doctor at like 11. And so I start trading at like 9:45, 10 a.m. I'm just looking at the charts. And then my mom's calling me while I'm in the middle of a trade. And she's like, are you at the doctor? I'm like, no. And she's like, why are you not at the doctor? I was like, I didn't want to tell her I was trading because to her, she would see it. She would think like I'm working or something. And she's like, you can't working. You have to sleep and all this stuff. So like, I'm just like, I'm going to go there. And she's like, when? I was like, I'm going to go. Like, why do I have to go right now? I have the whole day. I took off from doing the stream. And she's like, no, you have to go right now. And I'm like in the middle of this trade. And I'm like, all right, mom, I'm going to go. And I was losing at the trade at the time. So I like really needed my focus. That's the one thing about when you're trading. You have to focus on the damn chart. Qualcomm falling off a cliff right here. 194 now. And so thankfully I was able to get some focus. Are you 14 years old? Dude, I don't know why. Like, I think she had a really bad experience with COVID. And so when she found out I had COVID, she like freaked out. But I was like, dude, like I was losing on a trade. I was like down a lot of money. I was like, hold on. Like, mom, I literally cannot leave right now. I need to like resolve this. And thankfully it was resolved. But yeah, she, my mom actually was on the ventilators when she had COVID back in 2020. So she, there was, in March 2020, no one really knew what COVID was. So there was a couple of days where we thought she might not make it, So I think COVID has always been very triggering for her. But there's nothing you can do. You drink water and that's it. You move on. And you rest it off. So there's not much you can do from it. Rocket Lab. All right, we are starting to see more red candles again. AMD down 2, SoFi down 1, Nvidia down 2. Why were you down yesterday? I was early on my short yesterday. I was early and the market was pumping. And I was just like, this market's going to fall. Like it was kind of, because the SPY was pumping and some individual stocks were pumping, but everything else was dumping. So in my naive early trading experience, I was like, this is a short. This market's going to go down. I didn't know it would go down the way it went down yesterday. I thought it would be enough to like make a little move, but then it just dumped. And so the short ended up working out, but I was definitely probably 10 minutes too early. But we ended up going red. Wow, S&P 732.80. Okay, that's eliminating a lot of the move we just saw. Palantir also about to go red. Uber 69. AMD down 2.5. Nvidia hit 203 for a second. What do you guys think? Are we about to see yesterday's action again? I don't know if it gets as bad as that. That means SPY would have to be in the 720s. Also, it would be really delayed. Yesterday, this happened at around 9:50. Right now, it's almost 11, and we just hit intraday highs. So the fact that we're falling from there means either it's a fake breakdown or the market is not happy again with something. We should short now. I can never trade while I'm live, dude. Like I realize the only way I can trade is when I'm sitting on my 49-inch monitor and I'm looking at everything I need to look at. Otherwise, like you just need so much data to actually look at and make it a trade. And so I don't know if this is a short right now. It looks like everything's falling, but I don't know where the moving averages are. I don't know if we're losing key levels. It looks like we are. But it's weird that it's happening at 11 a.m. It's like the market kind of woke up and realized that we should actually be red. It's a continuation from yesterday, which is kind of shady, to be honest. How did you short? By literally shorting, not by SQQQ, not by puts. I don't trade options at all. Literally shorting the stock and then buying it back when it goes down. Obviously, by the way, we talked about this. SOXS traded freaking 1.3 billion shares on Friday. It's up 5% right now. It's only $6.20 because it's down 90% this year. That's part of the reason I think this thing is getting so much volume. Look at the volume today. 630 million shares on this thing. Almost half of what it traded last Friday. And I looked at this last night. It's only $6. Like, you could easily understand why people are trading the crap out of this thing. It looks like, it's easy to buy for 1,000 shares, but it's also down 89% this year because the Qs have run up so much. Oh, there's a green candle. Look at that. 731 to almost 734 within seconds. This is why I don't know if you could easily just go short in the middle of the day when we go red, because look at that candle coming right back up. Now, maybe that candle's fake. That candle just pumped Palantir, just pumped Grab, just pumped Intel, just pumped Hoodie. Look at that. Hood was getting ready to go below freaking 88. Now it's at 89.40. I mean, Bitcoin right back to 62. It is so weird how these moves have been, but I think because this intraday red is happening 2 hours after the open, it feels more fake than not. That's what my gut tells me. If it was happening closer to the open, it would feel more like it's an actual red day. But it was a pretty aggressive. I mean, do 737 to 732. It's almost a 0.75% drawdown on the index. Like, where's the Qs at? The Qs as well, down 0.5%. The Qs were about to lose 700 literally 2 minutes ago. I don't see any headline. Is there a headline? SpaceX's IPO will turn 4,400 employees into millionaires. Okay, that's great for them. I don't know if that's the headline, though. Hegseth says there will be big news coming on Venezuela very soon involving designated terrorist organizations. I don't think that's the news either. If SPY loses low of day, could go down to previous day lows. Yeah, that's why we got to hold 730, because if we lose, well, technically low of day is 731.94. If we lose that, 727 is on deck. And I'm curious, are we actually going down there? CPI came out in the morning, 4.2. Wasn't that bad compared to what the street expected. This is crazy though, right? Like, we were literally hitting, when Karp was talking, intraday highs, 738, which is very close to 740. We were at 722 yesterday, and then boom, there's that red candle that took everything down. And now I feel like the market's trying to figure out, do we want to go down? Do we want to go up? It's not as clear and concise as it was yesterday. Yesterday was pretty obvious. We were just going down. You had some bounces yesterday, but those bounces were not bounces that were backed by any level of meaningful support to make you think we're actually going to flip green. I know towards the end of the day, we kind of, like around 3 p.m., but then after hours, we kind of dumped again. So intraday was just that. Qualcomm, 240 to 195 here as that one's going down. Mitt, do you know if you got shares of SpaceX yet? I don't think they tell you till the day of the IPO. So on Friday, I think we'll know. Are you going to watch the game by yourself tonight? Yes, I will be. Honestly, I might fall asleep. I don't know, dude. The weird thing about COVID is you like randomly get sleepy and then you randomly like get hot, randomly get cold. And the only way to resolve it is kind of like going to sleep and forgetting about it. So, but I feel a lot better today. So I think just another night of sleep. But I do want to watch the game. I do not want to see us lose both games on our home court. That would really suck. Amazon, 240. It did touch 239 for a second. Take an edible if your body starts to ache. You know, I don't know if an edible would help. It might. I feel like it might make me go more paranoid than anything else. Brother, I just made 2K shorting SPY. Well, there you go. I'm not going to lie, dude. Trading it's a whole new world. It's a whole new world from investing. Because everything is about that moment, that second, that minute. It has nothing to do with the long-term belief that you have in like Amazon. It's like, is Amazon going up or down right now? And you have to make a decision. You use the data to make the decision. Then you take a trade. and then you see if the thesis matches the way you made the decision. You have to be really quick when you're making it's like you're kind of like in the zone, and it has nothing to do with if you care about Amazon or not. But if you're buying the dip on Amazon, that takes into question, do you believe in Amazon long term? And so it's a totally different mentality. But obviously that's why I think taking a portion of your investment account and trading is easier than just taking the whole thing and trading. But it also helps resolve some levels of feeling like you have to be in every stock. Marvell down 2%. Marvell at 244 yesterday. VIX at 21. VIX was at 23 yesterday. So it wasn't too horrible. Welcome to the dark side. You can't be a trader and a long-term investor. Yes, you can. I don't understand. I don't get why people who are long-term investors hate trading. Like, what is, like, if you have a $100,000 account and you take $15,000 and you start trading with it, and $85,000 is in long-term investments that you want to see compound, I don't get it. I don't understand why there's so much animosity. It's like, it is okay to be able to learn a skill set. It's hard to learn it. It takes a lot of focus, a lot of energy. You're gonna have to lose a lot of money in the beginning, but that's the same with investing. It's not a bad thing to want to learn how to trade. Now, granted, it's not easy. 100% it's not easy, but it's also like, if you have the time to commit to it and want to learn it, like, it's another skill to make money. How the hell is that bad? The trading portion of the port can be considered a hedge against the long-term port. Yeah. I just think in general, like, if there's certain long-term investments you have that you don't touch, and then there's a certain amount of money based on whatever your net worth is that you feel comfortable trading with, and that's it. You trade. And if you don't like it, you don't like it. If you do like it and you learn skills, then, like, I don't understand what's people feel so ideological about it. Like, I don't get it. SMCI, wow, 17% right here. 33.62 as that one's getting hit. Most retail loses money when they trade, though. Yeah, look, well, that's also why I'm not live trading in front of people or quote unquote teaching how to trade, because I don't, first of all, it's been a month into this experience. I barely know what I'm doing. Second of all, trading's not my brand, right? Whereas Jason, who really has 20 years of trading experience, that is his brand. That's why he teaches people how to trade, and he's been very successful with it. I'm more of a fundamental guy, find long-term companies, narratives, try to understand the thesis, invest in them. But I think whether you like it or not, when you're buying the dip, when you're trimming a position, when you're selling a call, when you're buying a put, selling a put, you are trading. You might not be day trading, but you are actively managing a portfolio, which you could call it whatever you want to call it, but you're trading at the end of the day. You're trading this allocation of shares for that allocation of shares. You're hedging this movement against whatever it's that you're selling at this level because you think there's a short-term top. Like, if you literally don't touch your portfolio all day, okay, you can say you don't do anything. But most people don't do that, So I don't feel comfortable enough to even think of teaching it because I barely know what I'm doing. But the idea that you shouldn't want to learn a new skill because it's ideologically against the concept of investing, it's like, why? If you you should always try to learn new stuff. If you don't like it, you don't like it. If you think it's not for you, it's not for you. But the idea that you should just be against it completely, that doesn't make sense to me. As I say that, the S&P getting ready to see those lows of the day, folks. 731. Bloom is also getting hit. Bloom right there, 239 fit. Wow, Bloom is the cheapest it's been in what? 3 months? Yeah. Well, technically not 3 months. Ever since the Oracle deal. Last time they were this cheap, April 28th. So about a month and a half right here. Got to 327 to 239. Meta loses 580. Okay, that little bounce might be getting faded right here. 730.50 is the key level. 730.50 is the key level. Intel 106.89, that's down. Where is Netflix? Netflix somehow green in the midst of this. Okay, now she's fallen. Now she's falling. Trump is not talking yet. I guess we'll go to him when he's live. Hood loses 88. Trump hasn't even started Q&A. Okay, so Trump, this is super delayed. It was supposed to go live a while ago. 7:30:50 is what we're looking for. If we lose that, we lose a lot. We lose a lot. Intel, nasty fall, dude. Freaking 112 to 106. Broadcom 372. It's feeling like yesterday without feeling exactly like yesterday, because we've had a lot of pumps in between. And some of these names still aren't red enough for it to feel like yesterday. ServiceNow, there's your red candle right there. Just lost VWAP, 107.90. NVIDIA is feeling like yesterday. NVIDIA is legit feeling like, yeah. What was the low yesterday on NVIDIA? Yesterday low was, oh, we did go below 200 yesterday. 199.34. That must have lasted for like a second before we bounced. I wonder, do we test it? Do we test it again today? Meta 575. I did not see losing 200 yesterday. I missed that. That's not good, bro, because psychologically now the market thinks that level is not that crazy to touch. I don't know if we'll touch it again, but you never want the market to feel like that's okay to get down there. Broadcom, Microsoft, both ugly. CoreWeave's got to be getting hit right here. CoreWeave, 95.80. I've not bought the dip on CoreWeave yet. I want to. I just also want to give this a couple of days, given Friday was so aggressive. And I know Monday we got the rebound, but when you have an event that happens 6 standard deviations above the norm, worst intraday in 3 years on the NASDAQ, I feel like you give it a couple of days and just see how things play out. And maybe it's just to buy the dip and everything goes back to the moon, but maybe there's like some consolidation that needs to happen for the dips to like meaningfully be allocated to. Meta 577. Okay, SPY. We got 20 cents before we lose the intraday low. Maybe if that happens, we're going below 730. If not, wow, Qualcomm. Monday wasn't a recovery. Okay, Monday wasn't a recovery, but it definitely wasn't, bleeding as aggressively. It wasn't a recovery to the highs, that's for sure, but still was up a little bit. I don't know. Do we get a bounce here? AMD, are we at the lows of yesterday for AMD? Yesterday we were at, 430. We're at 450. We still have a lot to go. I don't know if I trust this to bring us to new lows from yesterday. Oil is up too. Maybe the Israel attacks on Lebanon, that might be enough. Oil still at 90. Maybe Trump's about to speak, so the market's a little worried about that. Dude, summer does suck for tech stocks. I mean, we talked about that. Summer is not a good time for tech stocks ever. I think last year was a little different because we had the April drawdown, and so summer was kind of recovery, even though summer was still a little choppy. But historically, midterm year, summer, it tends to suck. We've also had a massive move up. So it's like you could see it happening, but you would also wonder what's the catalyst that really takes it off. And is it SpaceX IPO? Is it just market needs to consolidate? What would it be for? Yeah, we're technically not even in summer yet. We got a couple more weeks until we are in the summer. I don't know. Again, if we get a pretty ugly drawdown, I think 680, which I know sounds crazy, but 680, 690 is where I think it bottoms out. I mean, more aggressive than that would be 630, which is 630 is March lows, and then below that would be 600. And so I think 680, 690 with this earnings growth. Here's the wild card, okay? Here's the wild card. Let's say Q2 earnings aren't that good, as the S&P gets destroyed right here, 730.20, so we lost 730.50. Let's say the earnings, for whatever reason, just don't live up to the hype in Q2. I don't know what that reason is, but let's just assume. That's when I think this thing collapses pretty badly, because the only argument bulls have really been able to make is, well, look at the earnings growth. You can't be upset if the earnings growth is, it's like the earnings growth.
If the earnings growth starts to die down a bit, which I don't really know why it would, I'm just kind of making it up to play out the hypothetical. But if it does, 729 S&P, that's when, you could see the market being like, well, if we don't have earnings, and it's not like the earnings growth is going to be bad, but it might not be as good as the expectations have been, which is why the multiple is expanded for the S&P, right? And that could be kind of your core reasoning for why maybe some of the front running of this action is happening now. But then what if the earnings are amazing? What if they're like what if, Intel beat by 3,000%? What if Intel does another massive, it's just such an incredible level of growth that the market respects it. But what if that happens and the market still doesn't respect it, right? And that's what's been going on with NVIDIA, which is so scary, that every time they have these good numbers and the market doesn't care. NVIDIA 202.30, SMH 569. Yeah, now we are falling, folks. Oil's not even creeping up that much. Oil is still at 90. It's not even above where it was in the morning. So this drop feels a little less. By the way, yesterday when the market fell 8%, or like when the market was down 8 points and a lot of individual stocks were down 10 to 15%, oil was at 87. Like that was the most surprising. It was around, I think, 10 a.m., 10:20. Oil was at 87. It was down 2.3% of the day because Trump had said like he'll resolve the ceasefire or whatever. And the market was still falling. So yesterday it wasn't even based on oil. I think it was just based on exhaustion or just general fatigue, volatility going up. S&P 730 just rebounded off 729. Let's see if that 729 was the low for the day or if that's just a small bounce. Tesla reaching the levels that it hit yesterday. Morningstar comes out with their price target on SpaceX. I mean, I don't know how many people are going to believe in Morningstar's analysis, but they said, we believe SpaceX is worth $63 a share, which is a 53% discount to the 135 IPO price. We think their TAM is 129 billion versus the company's 1.6 trillion claim. And we believe there's only a 7% probability for SpaceX to reach $154 a share moonshot valuation. All right. You got some of the sell side saying this shit makes no sense. I don't know how much people are going to read into that, but Tesla losing its lows from yesterday. SPY back down to 720s. We are starting to see this thing collapse. The fact that it's happening 2 hours after the open and made people think that we were going to be okay today, which maybe we'll still be. But the past 2 hours, this kind of literally happened in 5 minutes. So the fact that it's happening here it's just weird. Because on Friday and Tuesday, it happened pretty much at market open. Trump is live. Okay, let's go to Trump.
Where is Mike Johnson? Right here. Mike, you're doing an incredible job. Not a big majority. Just rather have 40 or 50. I don't think you'd know what to do. We have. No. You'd say, what are we doing? That'd be no fun. He's done an amazing job. Acting Attorney General Todd Blanche, and Todd is up, and I hear he's got tremendous support in the Senate, and he's got tremendous support everywhere. Actually, he's doing a fantastic job. And Secretary of Homeland Security Mark Wayne. Where's Mark? Right here, sir. He gave up his Senate seat. He had a guaranteed seat for the next 40 to 50 years. And he gave it up to be Homeland Security because he just wanted to serve. Yep. They're amazing. Amazing. As well as Senate Majority Leader John Thune and Senate Majority Whip John Barrasso, who's here, I think.
Yes, sir. Yes, sir, Mr. President.
And John is, you're incredible. From day one, we got along,
Thank you,
right?
Mr. President. Absolutely.
First day I met him. House Majority Leader Steve Scalise, one of the bravest people.
Yeah.
And what he went through is incredible. And I actually think it looks better now than he did.
We're in the win the game tonight, Mr. President.
Oh, is it tonight?
Tonight.
The baseball, I'll be watching that. And House Majority Whip Tom Emmer, who is an unbelievable leader, actually. Just so highly respected. And he's in Minnesota and he's ripping them because he knows what's going on. I mean, You have your chance now, Tom, because people have really found out about it.
Well,
So
thanks to you.
I want to thank
Thanks
you.
to you.
No, but he's working with our people. They look like Elliot Ness. It looks like Elliot Ness and the gang up there, right? They're finding billions of dollars of fraud. And Tom Emmer is really helping us. Thanks, Tom.
Thank you.
And thanks as well to Senators Lindsey Graham, who had a big victory last night. He won by a lot. And no runoff, no nothing. Had a lot of very capable people running against him, and he just blew them away. So Lindsey Graham, congratulations. And Chuck Grassley, Rand Paul, who's here. Hi, Rand. Boy, oh boy, it's nice to have Rand. That's a good thing to have Rand. He knows what's important. Eric Schmidt has been an incredible senator, wherever you may be, Eric. He's tall enough. He's usually not too hard to find. And Bernie Moreno. Is Bernie here? Yes. Where's Bernie? Hi, Bernie. What a job, right?
Absolutely.
So how's the race going in Ohio?
You're very popular there, and you'll drag every Republican.
I hope so. Well, I love Ohio. We won by a lot, but you ran an incredible race. It was
a big assist.
They weren't giving him a big chance, and he ended up winning quite easily, right? So it was great. We're also pleased to be joined by Representatives Lisa McClain, Jody Arrington, and Jody. Where's Jody?
Okay, they are not talking about anything. I'll go back when they actually start talking about stuff. 729.50. We are trying to get that bounce right there. I don't know, guys. This is just weird price action. Very freaking weird stuff. This bounce has happened twice and got rejected and fell below 730 twice by now. Is this the time where it, keeps going or not? GEV, wow, 7% down on GE Vernova. Bloom down 9. Tesla getting absolutely wrecked, but there's a candle right there from 383. I don't know, dude. Okay, so how would if you had to describe why we've seen this price action to the downside, as aggressive as it's been over the past week, and even today, I guess at this point, what would you say? What would be your thesis on it? Put it in the chat. If you had to describe it in a sentence, in a few words, my one word would be exhaustion. I think the market's just tired. They are so tired of these vertical moves that they need a breather. So GE Vernova's down 6%, which looks ugly today. But then you go year to date, it's up 27%. It's made a massive move for a large cap. Past year, it's up 85%. And it sucks to say zoom out, but realistically, the vertical nature of these names makes you look back. War. People really think it's the war. The war is not good, but the fact that oil was down yesterday and we still fell 3% in the morning, I don't know. It made me feel like maybe it's not the war, it's AI fatigue. Obviously, the war is not helping. And if we escalate aggressively, it's definitely not going to help. Liquidity for SpaceX. I think that's been the big mainstream narrative that's out there. Oil was down, rates are up. Bitcoin. Kind of feel like Bitcoin's getting disconnected from the entire market at this point. It's just that asset that's over there in the corner. It'll choose to go up if it wants, but I don't know. It's definitely not been correlated with the NASDAQ for the past year. Rates, SpaceX, oil inflation, underestimating it. It's natural. People need to take profit. Yeah, that's true. We're also waiting on what Warsh is going to say. Look, my view on everything over the past couple of days is I 100% agree. It's, as much as I hate to say it, it is healthy. If we were at 780, 790 right now in the S&P, it wouldn't be healthy. It just wouldn't, especially if it was carried by one sector, which is the semis. At some point, it needs to healthily consolidate, grow into the gains, and then take the next leg up. There's just no world where going straight to the moon is the healthiest price action. But nonetheless, the question becomes, all right, how low does it have to go? Does NVIDIA have to go to 190 for it to really consolidate? Does CoreWeave have to go back into the 80s, or is this your consolidation move? And I don't think anyone necessarily knows yet. War should speaking next week. Next week, I think on the 17th. Insight, thank you for the super chat. Nixon 5. I'm rooting for them. I hope it works out. Today's going to be a big game. SoFi 16-14, down 2%. Google timed their dilution perfectly. Yeah, I mean, Google, but it makes sense. The Google executives probably looked at their stock price, looked at the returns they gave to shareholders over the past 5 years, and were like, dude, we have crushed it as a company. Like, if there's any time we should be asking shareholders to buy our stock instead of us buy back our stock, it would be now at all-time highs, basically, after we've been the best performing Mag 7 outside of NVIDIA. And so it makes sense. It's just the problem is they open the floodgates for the shitty Mag 7s, Microsoft, Amazon, and Meta, which, yes, I don't care how good of a company they are. They're all shitty. The shitty Mag 7s to also dilute, but they're not at all-time highs, which is the issue. And so I don't know how much appetite the market has for it. Okay, let's go back to Trump. Let's see if he's talking about something important. Not looking at some of the perception.
The ratios of expansion and contraction, because, believe it or not, when you have something that's 2,500 feet long, there's tremendous expansion. And who would think of this? Only person that does it, like me. And they have a lot of expansion and contraction. So when we're putting the surface down, would leave areas that can expand and contract a little bit, because it expands over 1.5 feet. Can you believe it? So I would have ripped it apart.
They're talking about the new pool in the White House. Okay.
So we left areas of expansion and contraction. We were testing it for 3 weeks, 4 weeks. It works great. And we just opened it last night, and people are going wild over it. So it was going to cost $400 million, and we did it for 10, probably 10, if you take away a couple of things. We did a much bigger job than originally planned, because once we put that in, it looked so good. The sidewalks outside didn't look good anymore.
Dude, we are in the middle of a freaking war. Trump this morning said Iran will have to pay the price for what they've done. And we're talking about a pool. Like, I don't even think this is political to be like, what the fuck? Like, it's like, just like, and if you want to interpret that as political, be my guest. But like, what is going on, bro? We're in a war. We have inflation going through the roof, worse than 3 years. And we're talking about a pool renovation. Who the hell is using the White House pool? Is Trump swimming in the, like, why do we even need a pool? Who's swimming in the pool? Like, the ballroom, at least I kind of understand. Okay, there's a reason for the pool. Like, why is that even something we're talking about? Like, this is the part around Trump's presidency that I think has confused a lot of people. It's like, there's some really big shit going on. And the fact that we're giving national airtime to a pool renovation, I don't know. I don't get it. Yeah, maybe for July 4th, maybe for the barbecue. I said, let's see if he's talking about something important, and he's literally talking about a pool. I don't know, dude. Some of this stuff is obviously annoying a lot of people. And obviously it's been annoying markets, but look, until we get clarity around this Iran situation, I don't know if markets are going to be able to meaningfully navigate a pool. S&P, once again, red candle, tops out at 732.57, right back down to 731.68. Let's see if it goes down to 729. You know, I always wanted a pool growing up. And my parents were like, yeah, no, we don't have any money for that shit. Pools are expensive, bro. But put in the chat if you have a pool. Pools are expensive. So we did not have the money to ever have a pool. But I haven't been in a pool in a while. I used to like diving. I was never like a professional diver or anything, but I always loved diving when I was really young. So it would be nice one day to have a pool. I have a bathtub. Oh my gosh. A good pool is now 200 grand. Yeah. You got to get the heating, the cleaning. There's so much shit you got to do. You know, Vitaly, he had a pool done, like, he sold a decent chunk of Enphase to fund the pool. This was back in like 2023. I remember I went to his house and they were building it at the time. I was like, why'd you get a pool? He was like, dude, I'm 45 years old. I want to get a pool. I was like, you know, it's a fair point. You want to get a pool, you get a pool. S&P 731, still below 732. We're not seeing it really make a rebound here. Hood's holding on to 87. You can buy a house in a nice neighborhood in Florida with a pool for $350K. Yeah, Florida and Texas, I feel like you can get a freaking mansion with a lot of core amenities for unbelievably amazing prices. And you have no state income tax. But obviously everywhere else it's a bit more expensive. Qualcomm right there, 194. That one's still down. Okay. Is there anything else major that we're seeing? I mean, I'm not seeing headlines. I don't know if we're ever going to get Trump talking about something important, unless it's going to take another hour. Another SpaceX headline. North Carolina treasurer rejects SpaceX valuation. North Carolina Treasurer Brad Brenner says the state pension fund will not buy SpaceX shares, calling its $1.8 trillion valuation too high. He says the focus is on achieving stable returns for retirees and warned about stretch pricing. You know what? I mean, shout out to Brad Brenner. If you are a treasurer of a pension fund, I don't know how you could sleep at night knowing you're putting people's retirements into SpaceX at $1.8 trillion. And maybe it ends up going to the moon and does amazing. But if I was managing institutional pension fund capital and Meta's trading at 13 times earnings and Amazon is at its lowest EBITDA in the past 15 years, and I buy SpaceX, I feel like I would be scared. Like, because anything could happen and your delta on your margin of safety is zero. So obviously that could create a lot more pain. Yeah, the upside is just limited at 1.8 trillion. Qualcomm 193. This one just continues to get hit. AMD 458. OpenAI preps new AI model, expects to go public within the next year. Yo, OpenAI sucks, bro. Anthropic's putting out new models every other month, killing it in the. Did you know that Karp in the interview didn't even talk about OpenAI? The whole conversation was about Anthropic. Like, they're kind of losing aura. I'm not gonna lie. They're losing aura. Like, they're not that cool. Outside of Codex, what is special about OpenAI? The monthly active user thing isn't even impressive because no one pays for that shit. Like, okay, 2% of people pay $20 a month. That doesn't even cover the cost of one. It literally doesn't cover the cost of 1/4 of one data center. You know, they're doing 20 billion on that. Data centers are at least 80 to 100 billion at this point. Like, I mean, it's not to be bearish OpenAI, but like, I think that's kind of the reason Oracle and some of the proxies have been getting it. Maybe that's part of the reason why Microsoft's been getting hit as well. Microsoft 401, these guys own about 270 billion in OpenAI. Yeah, now they're saying next year. Like, Anthropic just came out with Mythos, and they're talking about next year. Also, they had one of their chief scientists leave for Anthropic the other day. That tweet kind of went a bit viral. It's like Sam Altman can't even keep his best people. Literally couldn't keep Dario, who created his biggest competitor. SMH is performing better than NVIDIA. Is it good to flip from NVIDIA to SMH? Well, you know, it's a hell of a question because the reason people buy individual stocks is to outperform ETFs. And SMH has destroyed NVIDIA this year because SMH has all of the individual stocks like a Micron, SanDisk that have done way better than NVIDIA. So I actually don't think it's crazy to sell NVIDIA and buy SMH because you get exposure to all the other alpha. The problem is, what if the other alpha in the market when it comes to semis, your photonics, your memory, your packaging, etc., what if those take a break? And what if the company that's responsible for all that alpha, aka NVIDIA, actually gets re-rated back to where it should be, which is closer around 240, 250. SMH will do well, but it's not going to do as well as NVIDIA individually by itself. So I can understand the logic of wanting to leave NVIDIA and go to SMH, but if you're buying SMH here, you're essentially buying Micron at 900. You're not, just because you're getting diversified exposure doesn't mean you're not getting that exposure at a higher price. And so it would be more bearish NVIDIA than bullish anything else. And I don't know if being bearish NVIDIA at 202 makes sense here. If NVIDIA was closer to 220, 230, maybe there would be a difference in alpha, but 202, it still feels kind of cheap. I don't know. Doesn't feel horribly expensive. Let's go to Trump. Let's see if we have something else here.
And we had a lot of people came into our country, unchecked, unvetted, people from jails, people, drug dealers, people from mental institutions. Jails and mental institutions from all over the world were emptied out into our country. And we've got a lot of them out. We have a ways to go. It's very tough with the courts because the judges have been very terrible. They've been terrible, very sad. But we're fighting our way through it. We have made this in fact, we've made it a country that, as you saw last month, they said we had the lowest murder rate that we've had in 125 years. Think of that. And that's despite the fact, because we got a lot out, but we do have more. We had 11,888 people come into our country who committed a murder. 50%, more than 50%, created more than one murder. Think of that. Seeing people coming, I think seven murders. We allowed them into the country. We got most of them out. In the last 12 months, 0.
All right, so it looks like there's going to be a while for Trump there because he's going to get through the bill, get through all the talking points of the bill. Again, he's signing a ICE extension funding for the DHS. So I don't think they're going to take Q&A for like another 30 minutes when he might talk about Iran. Until then, we're likely not going to get anything there. But broader market still going red. Still going red. And I think that's the majority of the story today until we get some of those headlines from Trump on Iran. Probably still or jittery. We're not falling below 729, which is really good. So although we're red for the day, it's not as bloody as it was yesterday. If anything, I think the bias is to recovering intraday. Granted, we would need a pretty big pump here, which means Trump would have to say something. If not, then best case, we kind of stay at these levels and we have a negative 0.85% day on the S&P, which is whatever. Worst case, we end up falling a lot more in the next couple hours and we take out those lows from yesterday. All right, folks, that is it for me. I will be back on the close. We will have Jose, Tanner, and Neil to discuss Oracle earnings. Hopefully, we're not going to have too much crazy price action until we get into earnings. S&P, once again, trying to lose 730. It bounced 3 times off 729.50. So every time it gets there, it's either got to make a decision or the bottom's falling out. So we're going to have to see. But we'll be back on the close. We'll see what happens with Oracle. Hopefully things are not too bad. And yeah, outside of that, I think we continue to be in a state of uncertainty in terms of when these markets are officially going to be okay with everything that is kind of taking place, or are these jitters kind of just necessary, need to consolidate? And, are we getting ready for the SpaceX IPO as well? All right, word of the day. Let's do it. We missed it for the past day. What do we have today? We'll be back again on the close. Thank you again, everyone, for being here. Really appreciate all the support. A lot of people sent messages saying to feel better. It means a lot. Again, I love doing this every single day. It's the greatest. I think it's one of the coolest things in the world to do. It's one of the greatest opportunities I could have ever asked for. And so I don't take it for granted when I can't go live, and it really sucks when I can't. But I also don't want to deliver a bad product. And if I know I can't actually be there to talk and deliver analysis, then, it's going to be a crappy product and I'd rather just not be there. Word of the day. What do we got? Aporia. A state of puzzlement, doubt, or uncertainty, an impasse in reasoning. Aporia. Investors entered a period of aporia as strong economic data conflicted with weakening consumer sentiment. I think we should be okay to say this one. Aporia.
Aporia.
Okay, there you go. That's what we got. Word of the day. We'll be back on the close with Oracle. Obviously, all of us are probably entering a period of aporia because no one knows exactly what's going on right here. But we'll try to get some updates from Trump towards the end of the day. We'll get into Oracle earnings, and then we'll be back for the market close and keep going from there. All right. Thank you, everybody. Appreciate it. We got to hold 729.50 on the SPY. Hopefully holding 700 on the Qs would be nice. And we'll be back for the close and seeing how this ends up taking place. All right. Thank you, everybody. I'll see you guys on the market close. Bye, everyone.